Good morning, ladies and gentlemen. Good morning, good morning. Welcome to the Wednesday edition of the Education Room. Oh, thanks, Cav. That's okay. Man, I appreciate it, guys. I really do. I've got to tell you, though, you don't need to share your success with me. I mean, share it, tell me about it, but take ownership. You guys work hard to get to where you want to be. You guys are diligent in your efforts. So pat yourselves on the back a little bit. Welcome to the room, guys. Good morning, Troy. Good morning, Zorro, Paul, Cab, Andy. Who else is in here? All the cool kids are in here. Um, Man, we're going to do it again, guys. We're going to talk about it. Thanks, Rob. Good morning, Miss Debbie. Um, Guys, I am Mark. I'm the younger Novak. I teach the class. I have horrible analogies, and every now and then I'm known to swear. So brace yourself. Good morning, Jerry. Good to see you, man. Um, we're going to do really what we did yesterday, probably the same thing that we're going to do tomorrow. I wouldn't be surprised to hear the exact same class a year from now. And the reason I do that, guys, is because it works. Because the very simple approach that I offer to trading the markets works. The very basic chart reading that we focus on, it works. Adherence to a plan works. And man, we've had some good conversations this morning. And Paul, I appreciate the chattiness this morning. Um, One of the hardest things to do is follow a plan. I don't know why that is. Man, Jerry, Josh is killing it. He is absolutely killing it. I'm sure that has a lot to do with you. Every time he breaks a rule and posts in the room, he's like, "Yeah, my dad yelled at me for that one." Makes me laugh. You and Josh probably have the same relationship John and I have when we're talking about our trading. Um, Guys, one of the hardest things to do is follow a plan. I'm going to tell you, man, this is pretty G-rated, Rob. It really is. Every now and then I go a little PG-13, but you know what? If you're day trading the markets and you haven't heard someone say ass or shit, then what have you been doing, right? So it's going to pop out every now and then. I am human. I am trying to swear less, but I had to give up dairy recently, so I might swear a little bit more. Um, Good morning, user. Better than an apple. There you go, Ron. I wish I was a better drinker. I'm not. I'm a lightweight. Guys, let's go through and check news real quick. Couple different things that I want to share with you this morning regarding news. First, there's not a whole lot going on that's high impact, but it is crude oil inventories day, which means that at 10:30 a.m., the bunch of fat dudes in suits are going to make a decision based on the news, the release of the barrels. Today is also split volume for the most part on crude oil because your May contract is rolled to the June contract, which means that when there's normally, 50,000 people in one contract, um, now it's divided, which means that these are the days where I really, really, really focus on making sure that my rules are met, making sure that I'm not taking chances because there's less volume. There's less going on in there. So these are one of the things that I look. Yes, yes, I am. Can you guys hear me? Give me a Y if you can hear me, please. All right, it's Ron. Too many martinis for breakfast. Okay, you got me now? Cool. So I check news every morning, guys. This is really one of the first things that I do. And it's not because I really care what news says. I'm not worried about IMF meetings or crude oil inventories or beige book or tick long-term purchases. To be honest with you guys, news has zero bearing on anything that I do. But what news does do is it lets me know when the people who do make decisions based on the news, um, that is where I want to know where those people might be having a reaction. And all I do is I just kind of sit on my hands and I say, you know what? You guys do your thing, have fun. I will sit off to the side and wait for it to calm back down. So I do that every morning. That's a big part of my morning routine. My first cup of coffee, I'm checking news and I'm making sure that I have an understanding when things are going to happen. Um, Everything that I talk about, and I can't stress this enough, guys, everything that you need to be successful is here on the education page. Anything and everything that you need to be a confident trader is on this education page, specifically in the tutorial section. And guys, the tutorial section really covers a lot of different things. It talks about just the trading logic and the glossary of common terms. There it is, he moved it. Talking about trigger lines, tops and bottoms, talking about entries. I mean, and I'm going to tell you, everything that you need is right here. But the most important thing that I want you guys to focus on initially is this definition right here from the glossary of common terms. High probability trade. Guys, the high probability trade is a trade that typically wins 70 to 80% of the time. The high probability trend trade, as we teach it in this room, is a very simple trade. It only has 3 rules to it. It only takes 2 charts to recognize it. And your triggers are going to be the strongest. There's going to be nothing in your way, guys, between you and your target. And this is the trade that creates confidence for new users. This is the trade that typically wins more than it loses. This is the foundation of everything that you're going to do with Nexgen. And we focus on this. I focus on this so heavily and annoyingly for you new users because becoming familiar with the simple rules of the high probability trend trade, being able to pick them out on your charts instantly, what it does is it turns you into a chart reader. And that is probably the most important skill that I think I can ever give you guys, is the ability to look at your charts and understand what your indicators are telling you. Chart reading is huge because it's about 90% of your day. If you have a 10-hour day, 9 of it is going to be spent looking at your indicators, waiting for advantages. 10% of it is going to be spent trading. So when you begin to understand what your indicators are telling you, and you can recognize these advantages on a chart, you're going to understand where the market is likely to continue and where it's likely to go, and you will understand where it's likely to stop. And what these do for you is that likely to continue spot becomes your very precise trade entry, because you're going to be able to pinpoint exactly where the bounce is going to happen for that high probability trend trade, right where it's more likely to win more than it loses, and it's going to allow you to reduce risk, and it's going to let you maximize your profit potential. But you've got to be able to, I need my laser pointer, you've got to be able to pinpoint it, and that's where the chart read comes from. You're going to understand where the market is likely to go, and what this is going to do for you is it's going to allow you to not only hold for bigger moves when it's appropriate, but it's also going to give you this giant red flag that says, hey, let's take profits and then let the market sort itself out. And that kind of revolves around these likely to stop areas. We call these termination conditions. You will walk away from this classroom with a very solid understanding of where the market is likely to stop, where it has the potential to reverse. You're going to be able to see these key areas long before you ever get there, and you're going to understand that these are the areas where the people that control the market are making decisions. Trade entry precision comes from your ability to read the charts. And trade entry precision is what sets you up for management. The better your entries, the easier these trades become to manage. You need management and practice. That's it. And then, Paul, I'm going to give you a rock solid plan today. I'm going to give you guys the absolute best of the best plan. It's a written plan. It has very specific rules with very specific looks. And I'm even going to give you the management approach to taking it to optimize your chances for success. The hardest thing that you guys are ever going to do is just stick to the plan, is to say to yourself, I don't have to be in every move. The futures markets trade, $220 billion an hour. And you only need to catch $500 a day, guys. You don't have to be in every move. Be in the best moves. Give yourself the highest chance of success. Talk to yourself in terms of statistical advantages. Do I have an advantage every time I pull the trigger? The easiest way to becoming a chart reader, the easiest way to becoming a confident trader ASAP, ladies and gentlemen, it begins with posting in the room. It begins with setting your ego aside, putting your pride on the back burner, and making yourself a little bit vulnerable, saying to me, hey, Mark, this is what I did. This is the trade that I took. This is the chart read that I had. My goal is to become a chart reader, Mark, and I noticed that there was momentum. And I noticed that it was one of those 50-50 looks that you talk about, and it was coming from a good bottom. And there's my entry, and there's my exit. Can we just have a discussion? Can we talk about whether or not I read my indicators correctly? Do me a favor, Mark. Tell me, was there a better entry with less risk, maybe more profit potential? And was there an exit that made sense rather than trying to hold and hope and getting stopped out later? And guys, we're going to do this all day long. You're going to post in the room and we're just going to talk. But I'm going to tell you, the more pictures you post, the better you're going to be at this. The more pictures that you take pictures of and annotate, the better you're going to be. Guys, this is my morning. And I've already deleted like 10 of them, but 1, 2, 3, 4, 5, 6, 7, 8, hold on, 9, 10, 11, 12, 13, 14, 15, 16. I'm 16 pictures deep this morning already. And I know how to read charts. Your goal should be to do the same thing. Your goal should be to take so many pictures that you're like, oh crap, here's another picture, and write on it. Tell me what you see. Share it in the room, even if it's not a trade. Hey, Mark, I'm working on termination conditions, so I took 10 pictures of them. Can you just make sure that I'm doing this right? And what it does is it opens us up for all these great lessons. The next thing is to use your tracking sheet, guys. Use that spreadsheet that Nexgen gave you. Use the spreadsheet that I give you every morning, and I'm going to drop it in the room right now. Download it. Save over the one you had. We tend to update it every day. There's 4 tabs on this spreadsheet, guys. The first one is your trade journal. As you're simulating, as you're practicing, as you're breaking rules, as you're learning rules, as you're recognizing patterns, every time you pull the trigger, win, lose, or draw, drop it in the room and drop it in your spreadsheet. Because what you're going to do is you're going to come back, and I'm telling you guys right now, nobody does this like they should. Every morning, you should study the previous day's trades. What worked? What didn't work? What felt easy? What felt forced? And if you go through this every day, what you're going to find is that on great days, you're going to begin to recognize these patterns that are turning them into great days. And on those rough days, and we all have rough days, guys, you're going to be able to recognize what your thing is. What's my thing? Guys, my thing, and I'm going to tell you right now, I form opinions on some days. And I'll trade into termination conditions because I get distracted by other charts. And guys, this is my thing, and it's a work in progress, and I've gotten a lot better on it. But when I'm having a weak-minded day, when I'm having a tough-to-follow rules day, that's typically what eats my lunch. And I recognize that pattern because I go back and I look at my losing trades because that's where the information is. Don't hide your losing trades. The second tab, I built this for you guys. This is the rules for the high probability trend trade. The green columns represent the rules being met. The red columns represent the rules not being met. You've got to learn what both look like. You've got to learn what it looks like to have your rules met, but you also need to learn what it looks like to not have your rules met, because what you're going to do is you're going to create this ironclad rule for yourself that says the only way I'm going to enter a market is if my rules are met, and I'm not going to let myself fall victim to opinions or to wishing or wanting or hoping. My life will revolve around if then. If my rules are met, then I will enter a trade. The third tab is where you're going to be able to build your plan. I'm going to give you a plan initially, something that you can follow to the letter, something that's designed to optimize your chance of success. But guys, this plan changes as you learn to read your indicators. So you're going to start recognizing patterns that are outside of these best of the best, these highest probabilities. You should take those pictures, begin to build your trading plan. If you write a trading plan and you want a second set of eyes on it, email it to me. If you're working on management, guys, tell me, go, hey, Mark, I'm working on management. I'm going to post a lot of pictures about the way I'm handling this. Can we work together to make it better? And I'm going to say, absolutely. Hey, Mark, I'm working on entries. I'm working on patterns that repeat themselves. I'm trying to identify terminations. Guys, fill up this with pictures every day and develop your plan. Um, and then here's kind of a little reference sheet. Over 300 pictures of you guys using the software, using the high probability trend trade entries for both long and short trades, a very mechanical management plan for the beginners. If you're a NASDAQ trader, I've blown out an awful lot of accounts learning to trade the NASDAQ, learning to recognize some entry specific items. They're all here. I give you everything. Everything that I've done, I've given. Management ideas, patterns that repeat themselves, termination conditions. Your goal is to make your section, the favorite looks, look very much like the one that I put together. And I'm going to tell you guys right now, 15 trades a day. Let's just blow this up and make it huge so you guys can see it. 15 trades a day, guys, is 300 trades a month. 15 pictures is 300 pictures a month. Guys, at the end of 90 days of study, you can find yourself at that bare minimum 15 pictures, you can find yourself with almost 1,000 pictures. 1,000 pictures of entries, 1,000 pictures of your rules being met, 1,000 pictures of your rules not being met, creating all of these looks to memory, guys, and that's what you have to do. First, you have to learn the rules. We're going to talk about that this morning. Then you have to practice the rules, and it's okay to make mistakes. It's okay. Because the goal is that you practice the correct rules, that every time you pull the trigger, it's because you have a statistical advantage, not a desire for money or win or wealth. Because when you practice the wrong rules, and we see it a lot, simulator millionaires, man, I can get rich on simulator, but the second I go live, I get my ass handed to me. That's because you're not practicing the correct rules. You're not creating muscle memory. You've got testicular fortitude because it's only a simulator. You've got ovarian enhancement for you ladies, I guess, because it's not real. So what you do is you start practicing the wrong trades. You build this muscle memory, you go live, you blow out, and you're mad. So practice the correct rules and keep it simple. Keep it as simple as you can possibly keep it, guys. 1 to 2 trades, very simple rules. You've got to learn the looks so that they become easy. That's why we use the spreadsheet. You've got to learn the looks when nothing is moving, and it makes it easier to catch them when it is. And I'm going to tell you right now, when you get good at the high probability trend trade, you will typically have 2 to 3 minutes from making a decision that it's time to enter until the entry actually happens. So the more in line with the looks the easier it is to catch them. Make sure that you're always writing on your charts everything that you see, because you're going to come back and study them. Make sure that you're putting them somewhere where you can come back and study them. And then, guys, keep it simple. The high probability trend trade happens on 2 charts. That's it. Well, I can't just only have testicular fortitude, Paul. That would be sexist. 2 charts is all it takes, ladies and gentlemen. And the most current bar on your large chart, the big chart, the slow chart, the broad stroke of a brush, 1 bar will define direction, momentum, and areas. 1 bar will let you know if the first 2 rules are met. And this 1 bar, guys, it shows you the overall opinion of the people that move the market, the people that aren't you, the people with more money, the people with more power, the people that can create trends, that can establish momentum, the people that react to key areas. That's the large crowd. That's your big chart. From the large chart, once the rules are met, you're going to go to the small chart. This becomes your entry chart. This is where you're going to refine that broad stroke of a brush. What happens in this 1 bar is 15 to 30 bars on the small chart. We almost take an x-ray of it, if you will. You will pinpoint where the market is likely to continue. This is your best of the best entry for the highest probability trend trade. This entry is going to allow you to reduce risk. It's going to allow you to increase your profit potential, and your entries are a direct result of this small crowd, of the people that are willing to fight the large crowd, the people that want it to go down when these guys say up. And guys, more often than not, the large crowd wins. Approximately 70 to 80% of the time, the large crowd wins. But we're going to rely on the small crowd just to get us back to our best entry. So 3 rules, guys, that's it. 3 rules for a high probability trend trade. 3 simple looks that you need to learn. Rule number 1 says that the large chart must have strong triggers. That broad stroke of a brush must have strong triggers. If it does, I have the advantage of momentum. Rule number 2 says no termination conditions, none of those likely to stop areas. This is going to get me room to my profit targets, and this is going to assure me that I have the advantage of a clear path. Rule number 3, happening on that smaller, faster chart, is going to have me using a limit order to buy or sell a pullback, that small crowd push, and I'm going to do it at areas inside of triggers. And guys, you're going to be able to pinpoint with amazing accuracy where the market is most likely to continue with rule number 3, and that's going to give you the advantage of an entry area. So a high probability trend trade is nothing more than 3 advantages coming together to produce a trade. That's how we're going to talk about it. We're going to look at our charts and we're going to talk about advantages. We're not going to say, hey, Mark, is this a long? We're going to say, are my rules met for a long? Do I have the advantages? Guys, these 3 advantages, these 3 rules are testable. They're repeatable. It's something where you can scroll back and you can find these happening over a historical period. You can study it. You can develop trust in it. And that's exactly what I want you guys to do. The one thing that you guys are going to have to commit to is getting the work done. I'm going to teach you exactly how to study. I'm going to give you the tools to study. But this is probably the most true thing that you're ever going to hear today, is that your results will be the reflection of your efforts. If you half-ass your education, you're going to be a half-ass trader. If you try to take shortcuts on your education, you're not going to be a complete trader. If you choose to not keep it simple, you're probably going to struggle. Just history has shown. So let's start learning rules. Rule number 1 says that I must have strong triggers. Strong trigger lines. When the background is green, the market's going up. When the background is red on your large chart, the market is going down. Stick with the trend, guys. The large crowd creates it. Strong triggers means in an uptrend that my small, the solid lines, and the large, the dashed lines, my small break above and away from the large triggers, the space created between the two, like a pair of scissors that is just open, ready to cut. This lets me know that the odds are favorable for the market to continue up. Odds favorable momentum, that's our battle cry. Odds favorable momentum, guys, let that ring in your head for a second. What a great advantage to take. In a downtrend, when the smalls are below the large are wide, the space between the two, the odds are favorable for the market to continue down. Odds favorable momentum typically pushes the market in the direction of the trend. Odds favorable momentum can break key areas, and odds favorable momentum, God bless it, can cover the mistakes that we make as new users. It can give us a fighting chance when we start omitting advantages. So odds favorable momentum, guys, this is the best of the best. This is the easiest to recognize on day 1. And I'm going to show you right now. Separation between the small and the large. This is a market that's likely to continue down. When I have odds favorable momentum on my large chart, it's the most advantageous time to sell Fibonacci resistance on a smaller, faster chart in a downtrend. It is the best of the best time to buy Fibonacci support on a smaller, faster chart. These circles on these tails, guys, represent where you are going to have the ability to recognize an entry on a smaller, faster chart. So we're going to use these tails not to take trades, but we're going to go back and start studying. When we have those strong triggers, we're going to circle these trails, and we're going to see if, when we study the entry rules, if they set up for a trade. So odds favorable momentum leads the way, guys. Commit to it. It's the best of the best. It's the highest probability of success. But you're becoming chart readers, and things are going to get easier to see, and you're going to be able to recognize stuff in the moment. So when one line of the small triggers works its way inside of the large triggers, everything still says down. There's still momentum, but it isn't my best momentum. This is no longer odds favorable. This is just a little bit of momentum. This momentum, I can still find short trades if everything agrees. I just have to manage them a little more aggressively. And then when the small triggers work their way inside of the large triggers, guys, this is a weakening of the trend, a slowing of the trend. Listen to the words. Words are important. Anything can happen, up or down. And I see these weak triggers very much before reversals. I see these weak triggers before higher pullbacks, bigger retracements, and I see these weak triggers when we reach an area, and that's when the areas are more likely to hold. So once again, let's go back to that large chart on crude oil, and let's take a look and see if anything seems to hold true. There's weak triggers, and there's a pretty big retracement. There's weak triggers, and that pushed us all the way up to resistance. There's weak triggers right at a key area and a huge retracement. And there's weak triggers up top right at these terminations we're about to learn about, and that sets the tone for pushing the market down. Weak triggers, big push, weakened triggers right at an area. Sure enough, it starts pushing down. Guys, you can go back and study these looks, and you can start taking pictures of these looks. These are my strong triggers. These are my weak triggers. Commit them to memory because you're going to use those to take a trade. So your large chart's background is green. The market is up. The small triggers are above the large triggers. The large triggers are wide. They are angled in the direction of the trend, and there's space between the two like a pair of scissors prepared to cut. Guys, will everybody please give me a Y in the room if you recognize that I have the advantage of momentum in an uptrend, because that is the key. That is rule number one being met. And guys, this is going to set the tone for everything that you do. Once I have this momentum, it's imperative that I make sure that I'm not trading into those likely to stop areas, those areas that may reverse the market. And that's rule number two. It says terminations false, which means that I'm going to have room to my profit targets. And when rule number two is met, it means that I have a clear path to couple with that momentum. Rule number two, the areas that may stop the market, guys. These are lines on your large chart. And it can be a divergence high line. It can be a divergence low line. It can be red Fibonacci resistance, blue Fibonacci support, yellow 1-to-1s. And guys, these lines are where the large crowd makes decisions. This is where the large crowd enters, exits, takes profits, and you're going to know about them long before you ever get there. And you're going to use the T3 trigger lines, the same ones that create momentum, and you're going to understand whether these areas are likely to stop the market, whether or not they have the potential to break with that odds favorable momentum, or whether or not they have broken and the path is clear. And you're going to use it with a simple little recipe, guys, that says if price reaches an area, support, resistance, whatever, if price reaches an area and the trigger lines are still above support, still below resistance, guys, this is a termination condition. This is an area that may stop the market. It's an area that may create an untradeable bounce. Guys, this is an area that I'm not going to go short into. No more short trades because my path isn't clear. And it really is that simple if you allow it to be. So once again, check it out. Price reaches 1-to-1s. The triggers don't break. Let's go back and let's see if we can catch a couple of these just for grins. And I want you guys paying attention. I want you guys taking these pictures as well. So let's start on the left. Price reached a divergence high in resistance. The triggers didn't break. Absolutely no more longs. We didn't take a loser. Price reached yellow 1-to-1s. The triggers remained above. Absolutely no shorts. We avoided another loser. Directly into support. Weak triggers. They don't break. Another loser avoided. Yet another, and another, and another, and another, and another. One more. There's another. Egads. Guys, rule number two is designed to keep you safe. Rule number two is designed to keep you from trading into areas that may stop the market. So if price reaches an area and the triggers remain, I want you to burn this recipe in your mind. Triggers remain, above support, below resistance, Rule 2 not met, not a clear path, no trades into the area. Is everybody comfortable with this? Because this is crude oil, and it saved your bacon 10 times already this morning if you chose not to trade into them. I'm going to give you this picture. So what's going to create a clear path? Guys, if I can't trade into termination conditions, I mean, termination conditions don't always hold. Otherwise, the market would just rattle around in this little range. When my small triggers and my large triggers get to the other side of an area, both lines of both triggers, that area is broken. That area is a clear path now until I reach the next area. So for the brand new user, your best of the best is when the small and the large get below support, support behaves as resistance. With that odds favorable momentum, Troy, you're going to pinpoint the top of that tail. Maram, you're going to pinpoint the top of that tail. Zen Trader, you're going to pinpoint exactly where the top of that tail is most likely to form. And with this momentum and a clear path, guys, that becomes your entry for the high probability trend trade. And with all that momentum and nothing in the way, more often than not, it takes you to the next area. So there's 3 options. There's only 2 for the brand new user. It's either broken, both triggers through, or it's not. Triggers remain above support, below resistance. But we're going to look at this one, and I'm going to give you 3 options. For the brand new user, if none of the triggers break through, the area is not broken, the path isn't clear, rule number 2 isn't met, it's okay to sit on your hands to do nothing. It's all right to not be in a trade. You just have to wait and see what happens. Let the big crowd react. If the smalls and the large get to the other side of that area, well, the area is broken. And with all that momentum, we're looking for a pullback to Fibonacci support on a smaller, faster chart. These are your high probability trend trade scenarios, guys. It either is or it is not. It's either clear or it isn't. Let it stay focused like that while you learn to read your charts. Eventually, you're going to come to the potential to break. And the potential to break revolves 100% around odds favorable momentum. So if you skipped learning rule number 1, you're going to mess up this trade a lot, because it takes the strongest trigger look ever to make us feel comfortable with an area's potential to break. The small triggers have to smash through, not eke through, not peek their heads like a turtle coming out of the lake through, but smash through 3 to 4 points above that problem area. We want to get away from that decision-making point. The large triggers are going to drag behind. So 50% of my triggers have smashed through the area, but 50% remain behind. 69.80 has the potential to break. And if it's only the potential, it's not broken. And if it's not broken, it's not a clear path. And ladies and gentlemen, if it's not a clear path, then rule number 2 isn't met. And it's no longer a high probability scenario. It's no longer a high probability trend trade. I can't say that this is a trade that typically wins 70 to 80% of the time anymore. So understand what you're getting into so you know how to manage it. Is everybody cool with that? The idea that it's either not broken or broken for the first 30 days, that's the easiest way to do it. And then because you become a chart reader, you're going to be able to rely on your abilities to understand when the potential is there. I want to talk about divergences. So divergence is a loss of momentum. Divergence means that momentum didn't follow price. That's all it means. If the market comes down and goes up, that's a pivot. And a pivot just means that the market went up to down or down to up. When there is a loss of momentum at that pivot, you're going to see a negative number print. The negative number means nothing. It's just a byproduct of the calculations. And you're going to see a line, a cyan line from a low, print out to the right. This line doesn't print until about the 3rd bar up, which means that price doesn't reach this area. Price creates this line. And that's important because if the recipe is that price must reach the area, then this is not a termination condition. But when price comes back and reaches that divergence low, you guys ask yourself, where are my triggers? And if they remain above the area, well, now you're into a termination condition. Notice how weak the triggers are as it comes back to the line. If it trades below and back above, we have what's called a pivot stop out. This is your pivot. This is your stop out. Everybody that went long right here just got stopped out. And then the big guns came in and took over, and that's when it goes long, guys. So if it trades below and back above, no more short trades. This is what we call a pivot stop out. A pivot stop out is a termination condition. And this pivot stop out becomes even more powerful if it happens at key Fibonacci areas that are also acting as termination conditions. This is my favorite picture to share when I talk about termination conditions, guys. Even with odds favorable momentum, if price reaches an area and the triggers remain above, sit on your hands. Just say to yourself, I don't have to hope I'm better than that. I don't have to wish or want or pray. I don't have to rub the rosary beads or anything like that. All I have to do is absolutely nothing, because I don't know what the reaction's going to be. And by not trading in determination conditions here, it keeps you out of a loser the same way it kept you out of 10 losers here. Sometimes the trades that you don't take are better than the ones that you do take because you're not giving away money needlessly. From support, it goes to resistance, the triggers are below, and then it rattles around for a little bit. And it just keeps bouncing back and forth, and I don't really have momentum, and I don't really have a clear path until my patience is rewarded with the momentum. All of my triggers get above resistance. It's now support. And ladies and gentlemen, there is your tail. There is that pullback to Fibonacci support on a smaller, faster chart. This is your 90% of the day, guys. This is you saying, man, I'm bored. This sucks. This isn't fun. Why am I not making money? And this is the 10% where it's effortless, 10% where there's no stress, where it's easy. And the thing is most traders, especially new traders, lose about $1,000 in these consolidation areas. Lose about $1,000 when the rules aren't met. And by the time it's right, they skip it. They're blown out, right? They're mad, had to go kick the dog, whatever. Because they kept forming opinions. They kept trying to make something happen. So I want you guys to really just lean on the fact that it's okay to do nothing. And when there's nothing to do, do nothing. And the trades are going to come, guys. This is a pattern that happens on every market, every time frame. I don't care if you're trading stocks. I don't care if you're trading cryptocurrency. It doesn't matter if it's soybeans. Guys, this is a pattern. Whoop, that's not the one I meant to drop in the room. This is a pattern that repeats itself all the time. Not only is the entry pattern a pattern that repeats itself all the time, these shenanigans that trick traders into believing they have an advantage, well, those happen all the time too. Let's go back to this crude oil that's giving us beautiful examples of that. Look at all of the rules not met in areas of consolidation. Look how the market bounces in between these key areas. And guys, you don't have to get caught in these areas. You don't have to hope that areas break. You can simply sit on your hands, wait for the best of the best, and you will find your opportunities. And right now, as a brand new user, what you're doing is you're developing trust. You're developing trust in the idea that that trade is coming. And when it comes, you want to know your rules so that you don't miss it. So that's it for using lines. And once again, I'm going to ask, is everybody okay with where we're at so far? I'm going to go to chart reading. I've got some pictures real quick. Everything starts with odds favorable momentum, guys. Everything starts with a market that's likely to continue in the direction of the trend. Everything starts with that separation between the small and the large. This is the best of the best. This is the absolute positively can break areas, can cover mistakes. That's it. Momentum, Rob. It's hard to stop a market that has odds favorable momentum, especially if there's nothing in the way, which is why we couple it, right? We don't just rely on momentum to give us an advantage. We also say that even with that momentum, it's imperative that I don't trade into key areas, that I don't trade into these areas that may stop the market. And the reality is, momentum is awesome, but momentum into an area, it's nullified. That's it. There's no reason to hope. There's no reason to wish. So these are termination conditions at a high. You'll notice that the center one has the best momentum you could ever hope for going into that high, and it still bounces because it reached an area likely to stop the market. And then at lows, the exact same thing happens. Price reaches the area. Strong triggers in, creates a bounce. Weak triggers right at the area. There's your reversal. Strong triggers in, termination condition. Look at the reversal. Right into that pivot stop out. There's your reversal. Guys, you're developing trust right now. You're developing trust in the idea that you don't have to be in every move. You're developing trust in the idea that there's a very simple recipe to give you success, that all you really have to do is follow the rules, follow the recipe. And those are lines on the large chart, guys. But sometimes the large chart reverses. It doesn't hit an area. Sometimes it has odds favorable momentum and a clear path, and that market still ends up going down. Remember that we don't control the market. All we do is we pinpoint these looks that give us an advantage. This next look, you're going to see on a smaller, faster chart. You're going to see on that refinement chart. And this next look is 3 divergences in the same price range. Remember, divergence is nothing more than a loss of momentum, guys. Divergence says to me that maybe the sellers are losing momentum. Divergence, and I drew this up. Let me take this picture real quick. Divergence means that when price made it to here, momentum didn't follow. That's all that it means. So 3 in the same price range can terminate a trend, may terminate a trend, might terminate a trend, have the potential to terminate a trend. Do not definitively terminate trends. And this is important. I can, Zen, but I don't think that you actually got the picture in there. You only got me the first 6 letters of it. 3 divergences from a high, 3 divergences from a low may terminate the trend. It becomes more powerful when the small triggers are inside of the large triggers. It's that weekend, that anything can happen look. And it becomes more powerful still if your third pivot is higher than the previous, or your third pivot is lower than the previous from a high. And guys, this is 3 separate ideas. 3 divergences may terminate the trend. That's 1. That's a termination condition, rule number 2, not met. 3 divergences with weak triggers is more likely. 3 divergences with that head and shoulders pattern is more likely still. You're going to see this look at a low, and you're going to see this look at a high, guys, when your large chart can't give you that information fast enough, when that large chart can't show you the change that's happening behind the scenes. So 3 down here keeps you out of the last short, 3 up here keeps you out of the last long, and this is the only one on a small chart that tells me that I don't have a clear path. This is the only instance on a small chart where rule number 2 isn't met. The lines on the large chart are going to define termination conditions. We use lines on a small chart for entries, so we're looking for these divergences to make sure the path is still clear. And then, Zen, did you hear me? You didn't get your full link in there, but I will. Once we're done with entries, and I give you guys a plan, I'm going to go back and I'm going to look at all your pictures. But guys, if you have a picture that is pertinent to the lesson, go, hey, Mark, this is a termination question, so that I don't wait till later in the day and I get it while we're talking about terminations. Or if it's a momentum question, the same. Or if it's an entry question, same. Otherwise, I hold your pictures until after we discuss the rules so that we can see how the rules were met in your pictures. So my large chart has defined direction. Oh, awesome. You just nailed it. That's perfect, Zen. Absolutely perfect. And let me show you. Zen, you put 2 charts, right? You show me the large chart. You show me the small chart. You're annotating what it is that you see. This is perfect. And when we get to the feedback section, I'm going to give you everything I have in my arsenal to not only identify your chart reads, to look at your entries, to look at your exits, and to give you all the feedback you could ever hope for and probably more regarding what you just posted in there. So thank you for posting. Guys, does everybody see that the large chart said up, the large chart said momentum, and the large chart had not reached an area, therefore the path is clear? We have our rules met, guys. We have our rules met to look for an entry for the high probability trend trade. So now I'm going to turn my attention to the small chart. We're going to refine that broad stroke of a brush. We're going to let the small crowd do their thing, guys. Everything says up. We're going to hope that there's a fight. And I don't use hope a lot in my trading, but I always hope that the small crowd fights when my large crowd gives me my rules met. And rule number 3 says that we're going to use a limit order. You're actually going to wait for the market. You're going to be able to buy the market on its way down. You're going to be able to sell the market on its way up. And you're going to have that limit order waiting at areas, fibs, mid-bands, yellow 1-to-1s. But here's the key, guys, and this is such an important part to what we do to give you the highest advantage, is you want those areas to be inside of what we call favorable large triggers. So for the brand new user, this is your best of the best. When your large triggers, those smooth dashed lines, and your synthetic triggers, those stepped dashed lines. And just a quick heads up, the large or the synthetic triggers on your small chart are nothing more than the large triggers on your large chart. But the two work together because they're moving averages. And price corrects to moving averages. Price loves to come back to these trigger lines. But I'm not putting all my eggs in one basket. I'm not saying, hey, this little mathematical wonder is going to stop and make the market bounce. I'm going to insist that I have something solid for the market to ricochet off of. Fibs, mid-bands, yellow 1-to-1s nestled inside of these favorable large triggers, guys. And this is where I'm going to pinpoint exactly where the market is likely to continue. This is where I'm going to be able to reduce my risk, where I'm going to be able to maximize my profit potential. So when the large chart says up, when the large chart has a clear path, when the large chart says I have the best momentum ever, I'm going to turn my attention to the small chart and I'm going to look at my trigger lines. Are they up? Are they wide? Are they in the direction of the trend? I'm going to look at the areas that are beginning to fall inside of them. And there's nothing to do yet because I need the small crowd to do their thing. I need the small crowd to say, hey, guess what, Mark? We're ready to fight. And that begins with a reversal bar. The reversal bar signals the beginning of a pullback, a small retracement counter to the underlying trend is the language on that one. So at the time of the reversal bar, I'm going to identify my trigger lines coming up like a shark about to breach. And I'm going to look for fibs, mid-bands, and yellow 1-to-1s. And I'm going to create a window of opportunity. I'm going to create a box that gives me the highest chance of success because I just pinpointed exactly where the market is most likely to continue. And guys, this is your first 30 days with me. Is just getting good at these entries, practicing these entries, going back over and over and over, and saying when I have odds favorable momentum. Let's type it out. Strong triggers. When I have a clear path, right? No termination conditions on the large chart. When the large chart says, Mark, it's time to look for an entry, I'm going to wait for a reversal bar. I'm going to wait for the small crowd to do their thing. And at the time of the reversal bar, I'm going to draw a box, either mentally or go ahead and use the drawing tool around my trigger lines. My trigger lines are not where I expect the market to continue. My trigger lines are exactly where I expect price to correct, where I expect price to retrace to. I'm going to give it something solid to bounce off of. So from the highest point of support inside of favorable large triggers to the lowest point of support inside of favorable large triggers. I want you to type that all caps on your chart. Guys, this is where the market is most likely to continue. This is my window of opportunity. My entry comes from the highest point. I'm going to put a limit order right there at the absolute highest point of support inside of favorable large triggers. And this is my entry for the high probability trend trade, guys. This is your first 30 days with me. Learn how to pinpoint this entry because it's going to reduce risk. It's going to maximize profit potentials. Common pitfalls for the new user. But Mark, my small triggers turned against me. Doesn't matter. Momentum is defined on the large chart. But I also see people, when the market fluctuates before it hits their entry, jump in up here. Fear of missing out. We've all gone through it. All this does is it creates amplified risk. All it does is reduces the distance to the target. And guys, you want to have the least amount of risk with the most amount of profit potential. I see people enter on the reversal bar rather than waiting for the areas inside of favorable large triggers. This just gives you time to set it up. Yeah, me either, TLC. And I want you to see this. From 9:15 to 9:19, there was 4 minutes to work through your plan. There was 4 minutes from the time of the reversal bar for you to get that limit order in place. And it's pretty cool how that works. Because once you understand your rules, once you trust your rules, wild horses couldn't drag you from this entry. There's nothing on God's green earth that keeps you from not entering at the highest point of support inside of favorable large triggers. And one of the cool things about it is now that you can determine where the market is likely to continue, you know where the market shouldn't go. And you're going to put a protective stop outside of that window of opportunity, about 4 or 5 ticks. And here's one of the realizations of trading that none of you guys are happy about. If the market comes down and you enter at the highest point of support and it blows right through it without a care in the world, it's going to hit your stop. And if it hits your stop, guess what? You lost. You lost money. You gave some back to the market. But this is where trust becomes imperative. Anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the times. You will lose trades. I want you to just go ahead and come to terms with it. I'm not going to sell you this bill of goods that says, oh, guess what? With Nexgen, you'll have 100% winners. That's just a load of horse shit. You will lose trades. It's a normal part of a positive equity curve, guys. It's a cost of doing business. And what we're doing here is we're trading a statistical advantage. We're trading a pattern that has been proven to win more than it loses. So if I take 10 of these, I have to expect 2 or 3 to lose. But the cool thing is, if I take 10 of these, 70 to 80% of the time, it's profit target reached. So the idea isn't that I gauge my plan on one trade. I gauge it on a sample of trades. Can I go back and see this pattern? Can I look at odds favorable momentum in a clear path, and if it pulls back to support inside of favorable large triggers, can I take this picture 100 times and prove to myself that it wins more than it loses? If I can, and I'm going to tell you guys right now, if you take 100 pictures and write your rules and see these entries, you're going to learn to trust it too. And there's no way you're ever going to miss this trade because you believe in your heart that it wins more than it loses. I do. That's why I don't ever miss this trade. That's why this trade is the core of my plan, because it turned me into a chart reader, guys. It turned me into somebody that can look at my large chart, recognize advantages, and then not trade the tails, but be able to pinpoint exactly where that tail is most likely to continue. I can do it in a long trade. I can do it in a short trade. And because I know where the market is most likely to continue, I know exactly where I don't want to be in that trade anymore, and that's my first stop. But 70 to 80% of the time, I'm going to get a reversal bar, and I'm going to reduce my risk 2 ticks above, 2 ticks below. And guys, I'm going to reduce my risk before I ever take profits. And the cool thing about understanding where the market is most likely to continue, having a very specific plan for risk management, it's not uncommon to take those losers but only lose $30, maybe $40 instead of $200 to $300. And that's why we focus on entries first. That's why we look for the absolute best of the best. That's why we insist on the advantages of the large chart. And let's just see for grins where those circles end up. That one is directly into a midband right at those large synthetic triggers. That's a pretty good look. Some of you might have been paid. 2 lines inside of it, it went off the low line. Let's take a look at the potential long. Again, it came right back to the synthetics, right in. This is a little messier. It's a potential to break, but I want you to see this with a management plan. I made a little money before that market reversed because I could read my charts. So if you go back, I don't care what chart it is, guys, look at this. Small triggers peek their head through. 3 divergences in the same price range, and it blows right through an area of support inside of favorable large triggers. Rule number 2 not met. Smalls are peeking their head through, didn't have momentum and it didn't keep up. Straight into a termination. Look at the bounce. Man. Weak triggers, no areas inside of favorable large triggers, and look how the market continues up. So one of the coolest things ever is that if you just simply insist, the only way I'm going to enter a trade as a brand new user is with the advantage of momentum, with the advantage of a clear path, and with the advantage of an area inside of favorable large triggers, what you're doing is you're setting yourself up for success. So I'm going to ask the way I do every morning. Are there any questions about any of the 3 rules? Are there questions about momentum, about a clear path, about an entry area? I'm going to teach you guys how to study. There's 2 ways to do it. The first one, the most important one, I think, is go through this exercise. It'll take you 2 to 3 hours, I'm not going to lie. But your results are going to be a definite reflection of the efforts that you put in. In order to get to where you want to be, you have trouble with the mag small 1 to magenta small. What's the problem with it, TLC? And I want you to watch how we talk through this. So when you trade into it, you sent a picture about it. It must be up there. I'll find it, and we will look at it, and we will talk about it. Don't let me not talk about it. Sometimes I miss things. But first, let's talk about this, guys. Chart reading 101. I believe you. I have to scroll up to see it, but I'm going to stay focused here. Otherwise, I'll go on a huge digression. In order to get to where you want to be, you have to be able to recognize some looks and patterns quickly, right? That's all we've talked about. The look of momentum, the look of a clear path, the look of an entry. And this is going to reinforce the lessons. It will speed up the process. I've been giving you guys this for the last couple weeks, and nobody's done it yet. I still can't figure out why. Take 25 pictures of strong triggers and of weak triggers, guys. It should be 125, but I'm trying to not make it overwhelming for you. Take 25 pictures of a clear path and of a termination condition, and then take 25 pictures of that 50-50 look with the potential to break. And then show me 20 perfect long entries and 20 perfect short entries. Don't show me, show yourself. And guys, the task is not to simply take the pictures. I can go through, right? And I took this picture about the termination conditions, and I'm like, oh, look at all the termination conditions. Guys, the boxes don't do squat for me. Price reaches an area, triggers remain above support, below resistance. That's my recipe. This is what I'm reinforcing. And I'm reminding myself that when this happens, rule number 2 is not met. This is not a clear path. This is no trades into the area. So what I'm doing, Paul, and sometimes it does take longer, post a pic of the task page. Yeah, I sure will. I'm going to drop this in the room for you guys. I'll do it right now, Cisco. Take this afternoon and do it. Guys, this is a one-day deal. But if you write on your chart why it's strong triggers, if you write on your chart why it's weak triggers, why is it a termination condition? What's the formula? What's the disadvantage of having it? Exactly. Guys, if you do this for each individual picture, if you type on each individual picture, Paul, I know you're not. Guys, I fought this forever. I jack this up 9 ways to Sunday. That's why I'm so adamant about trying to help you guys avoid the mistakes that I've made. But what happens is that you begin to reinforce the looks and the advantages to be had with each look. And then you're going to piece those together to create a trade, right? A trade is the accumulation of momentum, a clear path, and an entry area. So I also built this tab for you. And guys, I went through Sunday of last week and I did 11 or 12 pictures of each. And it took me 30 minutes to go through, to annotate, to do it, to look at it. And I want you to see something. And I'm going to pull this off to the side so I can kind of power click through it. I'm going to click the first 5 pictures of strong triggers in the spreadsheet. Strong triggers means separation between the smalls and the large in the direction of the trend, like scissors open. This look gives me the advantage of momentum, rule number 1. And what happens if I go to the next picture? It looks exactly the same. And the next picture looks exactly the same. Look, there it is. This is rule number 1, advantage of momentum. And the next one looks exactly the same. And the next one looks exactly the same. And guys, all I've done is I'm burning this stupid momentum look into my brain. And then the same is true on weak triggers. When I have weak triggers, the smalls are inside of the large. I've lost the advantage of momentum. Anything can happen. And what happens is if you go through this, and I promise you guys this is true because I've done it. If you go through this, if you take these pictures, if you annotate them, if you talk about the whys, and you get through, this is 265 pictures, guys. 265 pictures. This will take you several hours. Do 10 of each. Start with that. Don't make it overwhelming. You will recognize momentum in a fraction of a second. You'll say, hey, look, the smalls return to the large. That's not my best look. And you'll say the smalls are below the large. That is very much momentum. And you'll say that the smalls are below the large, and that is momentum. And guys, once you can do that, then that frees you up to say, but wait a minute, none of the triggers are through support. I don't have a clear path. I shouldn't go short. That's one of those 50-50 looks with all these divergences. That's not my best long. This area is not broken yet. This isn't my best short. So guys, what you run into is the ability to take the looks, to break them down, see them as individuals so that what you can do ultimately is incorporate them into a plan. And that's where this comes in, guys. This is the KISS plan. I gave you guys this. Thank you for that, TLC. I appreciate it. So let's look, because one-to-ones is a part of terminations. What market is this? Gold? ES? Okay, so let's do this. The ES is trading at 1900 right now. I've got it trading at over 5,000. Okay. Oh, it's not letting me blow up your picture. So give me just 1 second. I'm going to blow up your picture. Odds favorable momentum. All the triggers passed. The magenta one-to-ones are close to the pullback. Either keeps going, hit the one-to-one and keeps going. This is your issue. So what's your issue? You're trying to determine if a one-to-one on your small chart is a termination condition? Is that right? Am I reading that correctly? I know, but what's the question? Is this a termination condition? So TLC, let's go back to simplicity. Is that an entry? Okay. Areas on the small chart that are used for entry. Fibs, mid-bands, yellow one-to-ones. Same thing I've been teaching for 3.5 years, TLC. Why? Because yellow one-to-ones represent a large swing. These little pink one-to-ones, these come from all these tiny little fluctuations on the smallest fluctuation-y chart that I have. But what you're not talking about here is the fact that you have weak triggers, the fact that you've had 3 divergences, that there's one area inside of favorable large triggers. So you're taking this trade with weakness and you're hoping that that fib holds on a little momentum style here. But it's past the divergence. Smalls and large broke through. The smalls did. The large didn't. So until my large triggers get down below this final divergence, this divergence is still in play. That third divergence is true, and it's from an area, and you don't have momentum, and your smalls are inside of the large. There's a lot of problems with this one. Smalls and large through the area to get past. But your large chart leads the way. Do you see how it was strong and there was a pullback and it was strong and there was a pullback and there was strong and there was a pullback, and now it's starting to weaken? And do you see how that pullback is bigger? And now it's even weaker, and there's that pullback and it's still weaker. We've got into that anything can happen stage, right? So what happened after this? Show me a picture. Let's take a look. These pink 1-to-1s don't bother me, don't bug me, don't concern me, especially on a small car. So it kept going. So we were in a strong trending market. And that's cool. Strong trending markets happen. Okay, did you go in the profit because your rules were met? Did you go in the profit because you jumped in and hoped without momentum? And the only reason I ask is, how are you going to repeat this trade? How are you going to take this trade again? Your rules are met? Okay. Well, then you're set, dude. If your rules were met, then why are you unsure about pink 1-to-1s? Ho, ho, ho. So, and it hit another pullback. Awesome. So it did come back for you. That's great when that happens. So your entry there, that little bump, you're taking a shot at a clear path with weakness from the area inside, right? And I don't have a problem with that. I think that's pretty cool. You're going to know where you have to manage it. You know what you're looking for. And I guess that's a lot to talk about. Just to say that these pink 1-to-1s, I couldn't care less about. Not on a small chart. I do like them if they show up with potential entries. But yeah, they don't worry me so much. Right on. Cool. Sorry, I rambled a little bit. Feeling good this morning. You guys always pay for it when I feel good. All right, guys, let's give you the KISS plan. The Keep It Simple Sunshine plan. The stepping stone in your learning journey. So, it depends on the market, TLC. Let me show you why. Oh, I had it up already. Glossary of common terms. So there's 1-to-1s, and this is the yellow 1-to-1s. And these are the result of these giant moves that don't really take into account the fluctuations within. So these yellow 1-to-1s are 100% Fibonacci alternates, and man, these are used by the big crew. These are used by the guys that move the market. And that is your yellow 1-to-1s. So these hold some weight, especially on the large chart, even on the small chart. Mine too, Andy. And then the small swing 1-to-1s, TLC, these are literally like the small little moves within the moves. Like these are those little fluctuations. And there's so many of these, so many potentials for these, that when you start getting to a 5-1 chart, you're talking about 7, 8, 9 ticks worth of movement creating these. So if they line up with an entry, I love it. But if they don't, I don't really pay attention to them. And then if you're a NASDAQ trader, I will pay attention to the pink 1-to-1s on the NASDAQ because, guys, the NASDAQ isn't using a 13-2 chart. The NASDAQ uses a 34 chart. So those small swings on the NASDAQ big chart, even on the NASDAQ small chart, TLC, are very different. And this is why I always encourage you guys, learn the rules simple. Learn them basic at first. Learn them solid. That was such a good question, man. That was such a good question. Because the NASDAQ is the exception to rules. But when I'm using a 13.2 and a 5-1 TLC, to be honest with you, the magentas never even show up on my radar, ever. Um, and I think I may have turned them off. I tend to turn them off because I just don't feel like I need them on crude oil. I don't feel like I need them on the S&P. Your results may vary, but the fact that you had your entry sitting at a fib right inside of favorable large triggers, man, that's your best chance of success. And that gives you a little bit of patience. That fib is solid. That fib is an accumulation of thousands of calculations. That small swing 1-to-1 is one little fluctuation. So great question. Thank you for that. That's a good chart read question. I think they're distracting. It's a 5-1, you know? It's the same TLC as and where's that picture that we showed earlier? It's the same concept that we see on the 5-1 where these little fluctuations trick people into not doing the right thing. Because these little fluctuations on the 5-1 mean absolutely nothing to me if this is the look on my large chart. So you start to learn to turn some of the noise off, and less noise for me is better. It keeps me from thinking about too much. So that was super pertinent to termination conditions. Thank you for that. And I hope that helped just a little bit. You have a question about that? Cool. Let me get through the KISS plan, and then we'll take care of the that question. As you learn to read your charts, guys, this is designed to optimize your chances of success. As you become a chart reader, as you learn to recognize advantages, as you learn to work on your entries, guys, this is designed to optimize your chances of success with the high probability trend trade. Giving you a checklist to enter the market where the market is most likely to continue. And on that 50-50 trade, teaching you to recognize advantages and be okay not entering a trade without them. With simulation, study, class feedback, continuous practice, guys, you're going to create your plan. You're going to create your plan. And your plan is going to be what resonates with you, right? Some people see long trades easy, but they don't see short trades so easy. Some people see these momentum trades like it's in slow motion, and some people overthink them. And some people can find every high probability trend trade and break every rule on the 50-50 trade. So you're going to go through and you're going to practice and you're going to get feedback, and then you're going to start to create your plan that suits your needs. And it's all going to come from your ability to read the charts. So it starts with, yeah, no worries, TLC, drop it in there. Everything starts with you guys being able to define your entry, being able to understand what it means to have the advantages, making sure that you recognize the very simple concepts that create the whole. And the simplest, easiest, most basic plan says don't fight the large chart, guys. So I'm going to bring up my awesome picture here, the book that my brother wrote, How to Commit Financial Suicide in One Easy Step. Trading against strong triggers, guys. This is one of the most common mistakes that new users make because they begin to form opinions. Well, there's a blue line, I better go long, even though it's against all the momentum on the large chart. And I see a lot of losses from new users here, and that's the opinion trade. Chapter 2 is trading in determination conditions. That idea that you somehow believe, even though you went back and saw it hold 17 times previously, you believe that it's going to break for you this time because you're hoping and you're wishing and you're wanting. So, yeah, for the low price of $49.99, guys, for $59.99, I'll have him sign a copy for you. And it's a little tongue-in-cheek, but these really are the two most common mistakes new users make. So if you just go ahead and commit to not fighting the large chart, you're way ahead of the average trader. And then you're going to define your entry. You're going to say to yourself, this is my entry. This is my trade. This is my best of the best. This isn't Rob's trade. This isn't John's trade or Wayne's trade. Alex doesn't get my trade. These are my rules for my trade. And in the beginning, your trade is the high probability trend trade, guys. And I've created a checklist. And it's got links to pictures so that you can see what they look like. And I've never had anybody use this checklist ever in the history of the checklist and do worse than 70%. Um, I've never had anybody take strictly high probability trend trades and do worse than 70%. And remember that the whole goal is to get paid. So it makes sense as a brand new user to escalate your confidence through the memory of success. That's what this trade does for you. I just dropped in the room the KISS plan. I'm also dropping in this high probability trend trade checklist. Print this out, put it on your desktop, learn how to police yourself. And I've put the same checklist in with pictures. Is the market coming from a good top or bottom? Guys, there is a video right here of my brother talking about using trigger lines to determine areas likely to hold, likely to break. It's attached here. If you're brand new, you should go watch that. It's an amazing video. And it reminds you that you can take a trade without a good top or bottom, but you got to manage if those divergences come into play. It gives you 100% what it looks like to have strong triggers, and it leaves zero wiggle room on when that advantage is gone. Whether or not you have a termination or a clear path, or if you're looking at that 50-50, and then identifying your perfect window of opportunity, exactly where your limit order goes, and even things to ignore as you look for entries. So, guys, this is a pretty solid plan, and it's designed to get you into the market. It's designed to give you 30 days of figuring out the absolute best of the best, getting in where the market is most likely to continue. And then you've got to manage it. And managing is a little more intricate. Managing relies on your ability to read your indicators. And the way your entries initially are very mechanical, very if-then, very pragmatic, if you will, in embracing that exact same management approach, keeping it very mechanical, very if-then for the brand new user, what that does is it helps alleviate some of the fears and it helps alleviate some of the opinions. And it really keeps you focused on rules adherence, guys. And this best of the best, super simple management plan revolves 100% on your ability to enter the market at the right spot. So it's imperative that you don't try to go be a moneymaker if you don't know where to make the money. Let the process yield the results, guys. Because once you're in where the market is most likely to continue, you know where it shouldn't go. That's your initial stop, and it's either going to get stopped out or it's going to give you a reversal bar in the direction of the trade. And then this is your first stop movement, 2 ticks above the reversal bar. Or if it's a long trade, 2 ticks below. And there's nothing for you to do, guys. You're either going to take a smaller loss, or with all that momentum and a clear path, the market's going to do exactly what it does more often than not, and it's going to go and it's going to hit your first target. For you brand new users, your first target's at $100. And $100 really isn't a bad deal, guys. Getting paid on the trade with all of these advantages. And once I hit that $100, I'm going to go break even because I'm developing trust in the idea that momentum carries the market, that a clear path doesn't give it anything to bounce off of. And I'm either going to get stopped out, break even, or I'm going to go ahead and hit my second target. And my second target is only $200 in the distance. So this becomes a $300 trade. It started at $951 on the pullback, and it hit $300 at $952, guys. 1 minute of your life with all of the advantages, with the perfect entry, with the very pragmatic stop placement. And what you're going to find is that if you practice your management to the letter, some days you're going to miss some stuff, and I'm going to show you this whole run through that I had this morning. Bum, 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 bum. Where did it start? Here it is. I had a strong bottom. I had odds favorable momentum, and I was 50-50 on this area. Because the area is not broken yet, I'm being aware, and I had a divergence, so I waited for confirmation using a third chart, but you don't really need it. The KISS plan says this isn't your trade. Because of the strong bottom, I'm willing to take an entry. Once I hit $100, I go break even. I've got $100 in the bank, and there's absolutely no risk, and it gets me break even. And I'm up $100. And then, thank goodness, I didn't give it all back, very pragmatic. And then it gives me a second entry, a confirmation. The large chart never changes, it's still screaming up. So I take the confirmation, the reversal bar once again, $100, $200, stop below the pivot. It hits my first target, and I go break even. And then when a third divergence prints, I have to hit close. And in this tiny little range of imperfection, guys, that was worth $230. I was very conservative. I was very if then. I was very pragmatic. And if $230 a day is the best I can do, that's almost $60,000 a year. And this is where everybody forgets, guys, that you don't have to make $1,000 every trade. You don't have to make $500 every trade. Squeeze off to anywhere between 250, 500, and you're in such a great position. And it just gets better as you get better. But you've got to know what it's going to take to get you in. You've got to know what it takes to get you out. And guys, that's the biggest thing that I try to encourage new users to realize. You have to know exactly what it's going to take to get you in. This becomes your best entry. This entry has to be repeatable. This entry has to revolve around a pattern that wins more than it loses. And then you have to know what your management rules are after you enter. And it's going to depend on the trade you're taking. Guys, if it's a high probability trend trade, you're going to use your high probability trend trade management. If it's a medium probability trend trade, you'll use a different management. If it's a momentum trade, there will be a different management. If it's an HVA trade, there will be a different management. So understanding what it is that you're getting into lets you know what it's going to take to get out of that trade. You need to know what your daily goals are and respect them. When you hit your daily goals, shut down, call it a day, walk away, and come back tomorrow to do it again. And the same is true on a stop loss, guys. I'm going to tell you right now, every Apex account that I've ever blown out, and I've blown out a lot of them, I hit my daily goal, I think, and then felt like Superman and ended up blowing out, blowing through the stop loss, believing that it was only one trade that would get me back, and then losing and losing and losing and losing and finding myself on that walk of shame. So establish your goal. If it's $500 and you're at 501, you stop. That's it. Get out. What's your daily loss? If it's $700, if it's $500, once you hit it, you're done. It's game over. Come back tomorrow. But come back ready to come back and take the right trades. And if it's not clearly drawn out, guys, if you don't have a plan, you're going to let adrenaline, opinion, fear, greed fuel the moves that you make. And if the market is slow, and Cav, thank you for this. Cav and I had a conversation about this, and you sit there and you sit there and you sit there. Guys, this is where you begin to fabricate trades. This is where you begin to break your rules. This is where you begin to say, well, it's not perfect, but I haven't made any money in the last 30 minutes, so I'm going to see if this works. I'm going to hope this works. And there's a reason that I take breaks 2 or 3 times during the day. Nobody should stare at a screen for that long. Go run a lap. So that's kind of a big thing. You may have done, oh my gosh, Jen, I did it. I've done it. I'm not proud of it, but I've done it. And I'll probably do it again. I'm not going to lie. I'm going to have a day where my head is wedged so firmly in my ass that I don't even recognize that I'm breaking my rules. Some days are just like that. The next part of this KISS plan is the 50-50 trade. And remember, the 50-50 trade doesn't have a clear path. So this is designed to make sure that you have a good top or bottom, that you have momentum on every chart. And it tells you 3 separate times that divergence kills it. This is the most lost trade by new users because they trade with divergence. They trade from a bad top or bottom. This plan will optimize your chances of success. You will break outside of this very simple plan once you're a chart reader, once you have the reps. But until you do, guys, embrace it. You don't need all the money, you just need your money. My brother used to always say, and it always made me laugh, if you walk into the bank and you say, give me all the money, you're a bank robber. You're going to get tased and hogtied, maybe shot in the foot. If you walk into the bank and you say, may I have my money, please? May I have what's mine? Most often, you're going to walk out with that money. So, guys, focus on your entries. Focus on very pragmatic management. Focus on saying that when I don't have momentum, maybe it's just not my trade. And what you'll find is that you will start to find more trades than you were able to find in the beginning. You'll be able to manage them more efficiently, and ultimately, you will reach your goals. But I'm going to go back and I'm going to say it one more time because I think it bears repeating. Where is it? Here we go. I've taught you how to study, to go back and circle those tails, to take pictures, to fill your spreadsheet. Your results, ladies and gentlemen, will be a reflection of your efforts. If you choose not to study, if you choose not to take pictures, if you choose not to participate, then you have to live with your choices. And your choices are probably not going to be that advantageous. So give yourself the best chance of success, guys. You're learning a new career. This is brand new. You're a freshman in college. Nobody expected to be brilliant on their first day. Give yourself a little bit of grace. Take a little bit of time. Study, commit to memory, ask a million questions. I want you guys to ask questions. I want you to ask all the questions. I'm going to say one more thing and then I'm going to take a break because you know what? I need a break. But I want to share this with you guys. And this is a result of an angry email that I got from somebody about the rest of the class not following rules. The key is having a foundation, guys. The key is understanding the basics and then just compounding, growing from it, creating a foundation to grow from. So for you new guys, I blanket with very conservative rules, the recognition of advantages, and a solid plan that optimizes the chances of success as you become a chart reader. So for new users, guys, all termination conditions are bad. No momentum is bad. Areas beyond the large triggers are bad. For the brand new users, these are the things that hurt you more than they help you. I use very, very specific blanket rules. Because it does increase the likelihood of success. And the more success you find early on, the more likely you are to stick with the software. They're not always bad, but until you have the experience to know when to use exceptions, it really is just safer that way for you. But just like anything, the more time you spend with it, the more you're going to see. And this opens doors, guys. You'll be floored at what you recognize 30 days from now. Even if you're 60 days in or a year in, you're still going to keep finding trades. But one of the biggest challenges is when new users see the older, more experienced users taking trades that don't fit the rules. And it creates confusion. Why did they trade into terminations? Why didn't they have momentum? They're breaking rules. Why can't I break rules? Well, the short answer is you don't have the repetition to know when it's okay or when it's appropriate. So guys, when I look at charts in the room, you're going to see a lot of trades that don't follow the high probability trend trades. We will address each chart listed in terms of momentum, a clear path, and an entry area. And if your rules say that you can trade into a termination condition, you better write that on the chart. And why? Because I'm just going to say you traded into a termination condition. You're robbing yourself of advantages. If your rules say that momentum isn't important, if you have a clear path and an entry area, make sure you put that on the chart. Tell me your rules. I'll hold you accountable to your rules. But once you get a little time watching patterns, you start to adjust your rules, to bend your rules, to change your rules. But you've got to learn the process that yields results first, and then the results follow, guys. And that's where the KISS plan comes in. So if you are brand new, embrace the KISS plan. If you are struggling with consistency, embrace the KISS plan. Get yourself back to a solid spot so that you can get to where you want to be. Let's take a quick picture because I see it in the moment. I have odds favorable. I also have a clear path. Did anybody notice that my area is not inside of favorable large triggers, that my area is beyond the correction point? Guys, give me a Y if you saw it. And if when you saw it, you realize that rule number 3 wasn't met because price moved right past the correction point and I didn't have a bounce point. This is just a squiggly little pink line. And guys, I expect price to return to the trigger lines, and if it doesn't have something to bounce off of, my rules aren't met. And if you really stick to the rules, if you're really in there, you didn't just take a loser. But I'm going to tell you right now, at least 10 of you in this room went short and just got your butt kicked. We'll see how many of you are brave enough to post it. And while you do it, I'm going to take a break, guys. I'm going to take 5 minutes. I'm going to stretch my legs, high five my wife, and I will be back in just a moment. feel the same way. Ah, my ship crashed. I love you.
Oh, come on, Ellie. Yeah, he's got to work. Come on.
All right. Sorry about that. Man, I'm struggling today. My computer. Maybe it's my internet. I don't know. Let me get it back up, guys. And what we're going to do is we're going to go through. And Haji, I know that was the Sunday school answer. So waiting for some sort of confirmation. If you are hell-bent on taking that trade, why not, right? Why not give yourself that advantage? Why not say to myself, hey, this isn't the best entry. It's beyond the correction point. I still think it might go down based on my large chart, but yeah, I'll wait for confirmation. There's nothing wrong with that. The trades that I took early in crude oil, I waited for confirmation on both of them because they weren't perfect, and I was able to capitalize. And the cool thing is that if the confirmation never shows up, you don't take the trade. And I think that is the biggest part. And if you do get that reversal bar, you do get that confirmation, what happens is you've already got your risk established. Yeah, so that's perfect, Haji. I like that approach very much. Sorry, I'm going through a full rebuild right now. So we're going to go through and we're going to look at y'all's charts. And remember, I'm not going to say, oh, that's not a high probability trend trade, you suck. What I am going to say is, all right, here's the advantages, here's the disadvantages. Hopefully you're telling me what you saw, what you were thinking, why you did what you did. And then if you do that, we're just going to talk about it. And just here's the first one I want to put in, just a heads up, is guys, the volume is rolling. And because the volume is rolling, I choose to go to the June contract. And it's that June contract now. So if our charts don't look the same on crude oil, that may have a lot to do with it. Jen put this in the room yesterday. Great top, odds favorable, 100% textbook snapback. Triggers break the area, pulls back to the area. So Cisco, areas inside of triggers. Let's go with that. It can be the synth, it can be the large, but it's not the synthetics that are the area. It's the areas inside. And this is where language becomes so important, guys. This is where language is imperative for you guys to have the best chance of success. Because if you shorten it every time you annotate a chart to my entry comes from the large triggers, my entry comes from the synthetic triggers. No, both of them are a potential correction point. Both the large and the synthetic are a potential correction point, Cisco. So you give them something solid to bounce off of inside of those triggers. You give it something hard, something bam, boom, like throwing a tennis ball up against a wall. And man, that's where the advantage comes. And you don't know if it's going to be the large. You don't know if it's going to be the synthetic. But you do know that if they're stacked one on top of the other and not separated, it's so much easier to find that precise entry. It's so much easier to minimize your risk. It's so much easier to pinpoint where the market is most likely to continue. Does that make sense, Cisco? So it's both of them. And then it's the areas within. Here you go, Haji. It's in the instructions. There's the link for you. All right, guys, I'm scrolling up to the top for a minute. I'm going to miss your questions for a second. But I wanted to throw all the praise at Jen on this one. Check it out. Great top, strong triggers, creates a full reversal. Decisions were made at a key area that reversed the market. She even had 3 divergences in the same price range just to kind of confirm it. The best momentum we could ever hope for And she takes what's called a momentum trade, and it's really just a trend trade. It's a little snapback to the one-to-ones right inside of the triggers. And with all this momentum from a great termination, it's an easy win all the way down to support. And I think that if we put Jen on the stand right now and asked her, Jen, was this pretty easy? Were you relaxed? Did all that momentum make you feel great about what you were doing? She would probably say, well, duh, of course it did. And then Paul, you didn't take the trade, and this is, you had a question about divergences on the small chart, right? How do I feel about divergences on the small chart? What's the she is here, relaxed. I love it. Cisco, areas inside of triggers. I know it's almost too simple, right? Areas inside of triggers. So if it's not inside of the triggers, what does that mean? And I'll show you exactly what that looks like. Let's do it again. So Cisco, if my midband is not in the large and not in the synthetic, it's in between the 2 points, right? So it may go from here or it may go from down here. And I just have to be okay with the idea that I don't know. That I don't know if it's going to be the top or the bottom. And if it's floating in the middle, it's not on a correction point. It's hovering in the middle of a correction point. My stop still has to go below the synthetics. And I know that I really do kind of come at it with this whole super simplicity, but it's that super simplicity that makes it easy. It's that idea that we don't give ourselves so many options. We just let it be. We let it be what it is, right? And then we know without any hesitation, without any question, that this is my best look. And the further I stray from this, the less precise my entries are, the more my risk is. Areas beyond the correction point are worse, in my opinion, than areas just in front of the correction point. Because at least here I don't miss the trade, and I still expect it to come to the correction point. But here, I'm already past it, and that was what we kind of saw in the S&P. So, man, they're great questions. And I know that I say the same thing over and over, but there's a reason. Because the easier you allow it to be, the less rules and amendments to rules that you create in your head, the easier your world is going to be. So let's talk about two things, Paul. The first thing is that you are 50-50, my friend. You are coming from a termination. You do have odds favorable. You do not have a clear path. You have smalls through and large above. And for me, this is one of the biggest things because it means that this is a maybe trade. This is an iffy trade. This isn't a high probability trade anymore. It's a medium probability trade. And at 2133, you're also trading directly into a potential termination condition on your other chart. So what you run into is, and man, keep in mind, this is a time when nobody's doing anything in the market. This is like right at 11 o'clock at night. You get one divergence on a 50-50. That's not a good thing, but because it's from a good top, I'm willing to take a shot. Two divergences for me personally, Paul, is a deal breaker. I won't take a 50-50 with two divergences because the likelihood of it winning goes down exponentially. The likelihood of a 50-50 winning after two divergences, it's so much smaller than the likelihood of a victory that I choose not to take it. You may have different approaches. But with this pattern, this creates an awesome, awesome look, and I want you to see this. If this were a high probability trend trade and the trade was still on the table, Paul, this pivot stop out, these two divergences, I'm expecting price to take out that previous pivot. It's just a pattern that repeats itself all the time. And because I'm expecting it to take out this pivot, I'm being patient for the area that's just beyond it, which you did an awesome, awesome job of there. And this is a pattern that repeats itself a lot, guys. This is a pattern that you're going to see all the time. And the cool thing is check it out. There's that pivot stop out here, and I want you to see where the next entry came from. Where did it go? I take my exit, and look how it creates that pivot stop out. It creates that perfect pivot stop out. So I wait for confirmation, and that's what gets me back in. So for you guys taking these high probability trend trades, and you're thinking to yourself, okay, my rules are met, this is where you may adjust outside of the highest point of support. And then Cisco, check it out. Mid-band caught him between the two. Didn't do a damn thing. It went right back to the triggers. Do you see it? So creating expectations based on patterns. Paul, that was a great question. Understanding what kind of trade you're getting into makes it easier to understand what your entry rules are. And then once you understand what your entry rules are, you're going to begin to recognize patterns that may adjust them, excuse me, a little bit over time. Great question. Thank you for posting that. And let me scroll up. Man, there's a lot of pictures in here. That Novak fella dropped a bunch of them in there. You guys should look at my pictures. There's some pretty good information on there. And then, Paul, I love the recognition. You're just saying, hey, check it out. Certainly has the potential to be a bottom, and we're still recognizing resistance above. Great recognition. And then that's where we kind of got into being able to recognize. And then TLC, I just saw your pink 1-to-1s. We already covered that. So my next picture is going to be Andy. And Andy says, odds favorable, clear path. You had to reopen the chart, missed the perfect entry, cost you some profit, but saw the areas right inside of favorable large triggers. Andy, this is perfect, isn't it? 100%. That's the one you never miss. Odds favorable, clear path. The best entry is right here. Ninja Trader problems. You still get in, you still make money. Nicely done. Why the exit though? $17.50. Okay, so you made your 100 and went break even. Is that right? And it got you break even? Had the stop pulled too close? Yeah. If this is your entry, sometimes you've got to respect that entry because this is still odds favorable and a clear path. And it's still an entry inside of favorable large triggers, but that's okay. You made a little money. It's harder to manage when you jump in late because you're thinking to yourself, I'm in late. Crap. I've even closed out of trades before like that. Paul, I'm not saying that it will. I'm saying that it may. I'm saying that a 5-1 PSO straight from the spreadsheet here, right, is likely to create a pivot stop out above it. So if I'm looking for the short, if I really want the short, all this does for me is it says, hey, even if I get in at the mid band, I know that it may come here. This pattern says that it may go up here, which means that my stop has to go someplace beyond. Does that make sense? Large chart still leads the way. These two divergences create an expectation. And it's kind of cool because you see these and what right now you're like, what the hell? It adds every day. The more you see it, you're going to start to recognize these. Guys, if you start seeing patterns that you recognize over and over, take pictures of them. And you'll be like, oh my gosh, this is like the 12th time this has happened. This is amazing. I'm going to formulate a plan around it. Nice stuff. Who's next? Paul says lack of focus. Story of my life. That was the excellent bottom so far. Let me see what you did here. Weaker triggers with divergence, clear path. No terminations, Paul. You do have a clear path, very much. So let's go through it. Just large chart, small chart. Large chart says down. Yeah, for sure. Large chart says down. Large chart says clear path. Small chart says divergence in one area. And you're like, man, I'm giving up one of my advantages. But I still have a clear path. I still have an entry. You take an awesome entry. And I'm not sure why you got out. I guess you realize you're like, whoa, wait a minute. It's not doing what it's supposed to do. Let me save some money. But you could have been just stopped out right above. I think, in my opinion, that's worth a small loser. With a clear path, everything down, coming off resistance, area inside, I'd probably give up $50 on that one all day, Paul. It's a great read. Yeah, break even's a victory. But even if you lost 50 or $60 on that one, man, that's acceptable losses. That's a market coming off a resistance. Everything says down. Your smalls are very much outside of the large on the small chart. I think you read it perfectly. I think you entered it perfectly. And I think that you could have taken a hickey on that one and not been too terribly upset about it. So nicely done. And then, JW, everything says up. The path is clear. You try the momentum trade, right? Nothing but momentum, which means that you get out when that momentum goes away. And you say failed momentum trades turn into trend trades. Easy money. JW, great trading. Failed momentum trades. Your thinking is great, Paul. Failed momentum trades, when the large chart looks like this, typically turn into trend trades. And then I'm not sure what got you out. You let a fluctuation on the small chart override momentum and a clear path on the large chart. Is that a good way to say it? I'm going back to it. It's okay. So one divergence, no worries, perfect entry. And then going up, there just wasn't any reason to exit. The second divergence, the lower divergence, absolutely. That tells me exit out, wait for a signal. There's a difference between not being greedy and being fearful a little bit. Okay, so you're just looking to get paid on Apex. I will respect that all day long. All day long. Drawdowns suck on Apex. So getting paid is the goal. Good job then. See, I didn't know that. I didn't know that about you. So now when I see these aggressive exits, they make sense. Thank you for sharing that. Hey guys, share your plans with me, because then I'll shut up and start asking you if you got scared. GWC. Termination. Ooh, try to go short into a termination. That didn't work. And then you said when the termination rolls, I'll go long into another termination and quick pay and got out. Yeah, you're flirting with it a little bit there. I love the great bottom, GWC. I like the momentum, the fact that there's no divergence, the perfect entry, the quick management, and not being willing to lose. And guys, that's what happens when you start to learn how to read your charts, is your reaction time is so quick that things work out. What do you mean, what did you do wrong? Explain why it's a momentum trade, Muser. Odds favorable, odds favorable. He just jumps in. The only thing he has going on here for him is momentum. That's it. There's no areas to trade off of. There's nothing. This is nothing more than him saying, guess what? With this look on both charts, hell, it may push up another 50 points. And then this is him saying, well, I'm on the wrong side of triggers. My momentum is gone. I'm going to take an exit. Momentum in, loss of momentum out. But it's a momentum trade because that's the only thing going for this trade. Does that make sense? Guys, these look easy, but the reality is that one should have been taken somewhere about here. And then he would have made a couple hundred. Yeah, so good stuff. Whoops. All right, GWC, you asked what you did wrong. Let me get back up to it real quick because I just accidentally closed it out. And I love this. And man, I'm going to go full Sunday school. GWC says, but Mark, the market went up anyway. I traded directly into a termination condition, but the market went up anyway. I took an entry with split triggers, but the market went up anyway. I exited off divergence from a fib into a termination condition, and the market went up anyway. What did I screw up, GWC? Well, you traded into a termination condition. That was your first mistake, but it worked out. Yeah, and I like your one shot without divergence, right? And it worked out beautiful with all that momentum. But then when the market hits, bounces off of, and creates divergence from that same termination condition, man, there's no reason to take that next trade, GWC. It's one that's going to lose more often than it doesn't. This is the market trying to tell you to break your rules. This is the market telling you, hey, let's give him this one. And maybe he'll trade into this termination next time. And maybe he'll try to go long into this one next time. And maybe he'll take that long into this one, right? So GWC, I think you did it perfect. I think that your management was spot on. I think your aggressiveness without the divergence and the good bottom was perfect. And I think you not taking that next trade into divergence off a termination with split triggers, right? Your large triggers are all the way down here. I think you absolutely crushed it. And I can't find anything wrong with this trade no matter what happens next. And that's hard, guys. It's hard to watch the market do what you think it's going to do, but your rules say that you have to take an exit and then be okay with whatever happens next. I hope that made sense, but man, I love everything about your trade. And I couldn't come up with anything wrong with it. All right, Zen Trader, for whatever reason, your tiny little charts won't blow up for me. So I'm going to make one that I can blow up. Dun, dun, dun. File, image, save. Yes. So let me open this one up so that we can see it real quick. 1 second. Here we go. Can't read what you wrote. 3 divergences below the magenta dots. Magenta dots have nothing to do with it, Zen. They're off in the distance just hanging out. But these 3 divergences say the market's likely to reverse. It's definite termination condition. Next bar, change from green to red. I don't have any rules that discuss bar color. First red close below trigger line. On the 5-1 chart, all right, so let me show you what you did here. Are you ready, Zen? Are you with me? I'm going to show you something cool. What you did is you took a large chart termination condition, which is an awesome way to start your hunt for a trade. And then from that termination condition, your small triggers rolled on your large chart. So that meant that the fastest momentum indicator actually reversed. And it gave you a little bit of a downtrend. Or it started at least the push down. And then what you recognized on your smaller, faster chart, let me see if I can open this. Dang it, save to downloads. On your smaller, faster chart, which you recognized, was the pullback to the small triggers on the large chart. And that's what this is right here. And that's where that lower divergence comes in. So what you were able to recognize, and this is pretty cool, is a trade that Nexgen's been teaching since 2004. When Fibonacci resistance holds, the small triggers roll, sell a pullback. That's the pullback right there. You can identify it because it's right at large triggers down. It's right at a mid-band. There's no divergence into it. It's off of a termination condition. And this is a beautiful opportunity to take that market down. And then this is your next opportunity for a short trade. It resistance inside of favorable large triggers with odds favorable and a clear path. Does that make sense? So this is a more aggressive shot at being first from the top. And if you don't catch that one, there's your high probability trend trade after a termination reverses the market. And that's the easy one. That's the one that I'm never going to miss. And look how it pulls right back to resistance right inside of favorable large triggers. Great picture. Great large chart read. It sets you up for an awful lot of success. And guys, it's just patterns. It's the same darn look since 2004, which I think is pretty awesome. Hopefully that was helpful. Nicely done. Let's see, where are we? Cav. Cav says pivot stop out, odds favorable, 50-50, all the momentum. You trade into the areas, not from the areas. You took it one tick below. So Cav, the rule on this one for the momentum trade is small triggers break the area and then you pull back. And man, I know that this one worked out for you, but this is directly into support, and none of your triggers have even come close to breaking yet. Because you're not in at 36, you're in at 42 up here, above the mid band. Small triggers. And I'm telling you, sometimes it doesn't happen, but letting the small triggers break and trading from areas instead of to areas, it's a consistency thing. It's a more likely to win. And this one, because of the termination, the momentum, you are able to fudge your rules a little bit. And I love that because you understand when it's appropriate. And I don't even think Cav's in the room. And guys, this is one of those things. I'm never gonna say, yeah, let's trade into areas. But I will say that when a termination creates a reversal, when the momentum is that strong, you're going to have this little bit of recognition that allows you to take advantage of lower probability scenarios. Weak triggers, bad bottom, directly into resistance. It pulls back to the triggers. Got lucky on this trade. Amen. You sure did. I like it when you guys get lucky to the tune of profits, but that's that building of long-term failure, guys. Getting lucky rarely pays the bills long-term. Not a pivot stop out. Who was this? Was this Cav? He's not in here. I want to make sure. Oh, this is Jen. Jen, is this you? Sorry, guys. I get confused after a while. Oops, that's okay. Jen, not a pivot stop out. How come? Because it's just a pivot, right? The market went up, the market went down. It's just a loss of momentum from the middle of freaking nowhere. Does that make sense? And why does that become, oh, my least favorite word. Okay. I'm going to turn it into a lesson. So if you've got it, don't worry about it, but this is for the rest of you guys. When price comes down and goes up, it creates a pivot. If there's a loss of momentum at the pivot, you see this line. Guys, this line just says loss of momentum. That's all it is. It's nothing more. It's just a loss of momentum. It means that the buyers stole a little momentum from the sellers, that the momentum didn't follow. This line becomes That's different. POS is a little different than PSO. Um, it becomes a pivot stop out when price reaches it, trades below, and goes back above. So this is one of those things where if this were a pivot stop out, that would have been a termination condition, and that sets up, you're just thinking differently. This is just a pivot with a loss of momentum. And then you're coming down. Let me figure it out. 05, 05, 07. So we're on this one right here, yes? Where we did trade into support. But because of the overwhelming momentum, because we're below everything, because you've got strong triggers, you say, you know what? I'm willing to take a shot into the termination condition. Take care, JW. And then I'll exit down here. The only thing I'd have to ask, Jen, is do you realize that you traded into a termination condition? If you did, that's cool. Because we played bar fight on this one, right? I haven't done this one in a while. Let's do it. So the trend is down. The momentum is overwhelming. Small chart says down. It has odds favorable. The entry area is concise. It's small. It's low risk. What else do we have? Okay, so this is the drunk rugby team. All right. And we're at the bar, and they are pissed about something. And that's what all these advantages represent to me. It's like a bar fight. So over here, I've got this little bounce. And this is the captain of the chess team. And he's anemic and a bit sniffly. And when you learn how to read charts, you begin to look at them in terms of advantages, right? So Jen, you're like, but gosh, look at the large chart. I'm willing to risk a little money on this look, right? I've got all these things for me, and I've got this one thing against me. I know it's against me. I'm not going to risk tons, but if I had to pick a side, guys, I'm standing with the rugby team. I'm standing with the rugby team, and every now and then the captain of the chess club is a black belt in jiu-jitsu, and he whips everybody's asses collectively. But just in an advantages versus disadvantages, if you're going to take a trade like this, it's looking pretty good. Wouldn't you agree, Jen, and everybody else? And if you've never been in a bar fight, and this probably doesn't make sense, but if you have, it's more fun to be on the side of the rugby team. What's your question? Because there was no pivot stop out. There was just a pivot with a loss of momentum. What's the question? So my question is, that was the drum roll for you. While you type it, I'm going to take a picture of this. And I'm going to give it to you guys. Bar fight. Oh, but does it make sense, Bob? Would pivot stop out have been if that 49% printed at the previous high on the range? So you're asking if this pivot had divergence, would it have been a pivot stop out? Is that right? That's what you're asking? If that were a magenta line. So price never reached it. Nope, it just would have been a second lower divergence. Make sense? Rob. So what's pretty cool, it's a great question. I took this picture. Guys, one of the things that I'm working on right now is when the Nexgen funding comes through is I'm developing a blog, taking down concepts and then turning them into new concepts. turning them into single page or two page, couple pictures, a little bit of words, make it easy to break it down. This was the divergence picture that I made. So white bar is price, yellow bar is momentum. Your software runs calculations in the background, and if momentum doesn't follow price, the negative number prints, and the magenta line forms right about the third bar. And guys, this is the most basic breakdown of what divergence is. Sometimes you'll see the negative number flashing and changing value, guys, and this is the software running the math over here. But if divergence is true, it won't happen until the third bar off the pivot. So at this stage, it's not true. It's just potential. Sometimes they'll print, sometimes they won't. So all it is a loss of momentum. All it is this idea that momentum isn't following price. And guys, we take advantage of divergence several ways because you can see the exact line of where momentum stops and where it's lost. And that's what creates the pivot stop out, is recognizing the line and then the pivot and then three divergences in the same price range. And this is one of the things that I wanted to put in here, is divergence is not a negative, guys. Divergence is not a negative. It's not a bad. It's not anti-success. It's just a loss of momentum. And don't let one simple loss of momentum deter you from a trade on the entry chart. And one divergence may be exactly what you need for your first entry, and one divergence may just be that little loss of momentum, and everything's going to continue. And you're going to be able to identify when it helps, when it hurts, when it should be ignored. And that's what we talk about. And Jen, they come from your great questions. They come from everybody's great questions saying, hey, but what about this scenario? Does it change something? And it really doesn't. So perfect. One divergence on the small chart is exactly what you needed to find that entry with all the wonderful things here. So great question, Jen. Thank you. And a great example of when you can start to really read your charts. You'll find that you break outside of that very simple, that you will break outside of that very rigid. 50-50, manage it tight, target filled, stop loss reversal line, 285, two contracts. Okay. So, Adriana, let's look at the large chart. I am, Paul, just a little written blog. Me rambling, trying to be smarter than I am, probably. So just the large chart, Adriana. If I had to ask myself, do I have momentum? What would you say? With the small triggers inside of the large triggers, the small triggers inside of the large triggers, the triggers have swallowed the small triggers. The smalls are inside of the large. I'm trying to see how many ways I can say this to help you guys out. I have what I might consider to be anything can happen triggers. So as long as you know, okay, when the small are outside of the large, you're not too afraid. But they're not, right? Does that mean that you're afraid in this particular picture? And I'm okay without having momentum, right? Because momentum, I love it, but if it doesn't, then we're good. But here's the other thing. Is price reached an area? No, they're not. They are very much inside. There's your small triggers. There's your large triggers. And then you've reached Fibonacci resistance with weak triggers, which means that you're trading directly into a termination condition without the advantage of momentum. And you're taking what would be considered a momentum style trade without momentum into a termination condition. Does that make sense? This is odds favorable momentum. A 50-50 means that the smalls have broken but the large have not. which means that you're trading directly into resistance. I love that you got your first target, a little bit of overrun, but I'm not surprised that it didn't hit the second because you don't have a clear path and you don't have momentum. And the only thing that you really have is you're taking kind of a momentum style look. And there's a little bit on the small chart, and it got you. It's super low risk. It's coming from a good bottom. Um, the momentum is solid. And sometimes they never quit, right? Sometimes you have weak momentum for 50 points, Paul. And Adriana, I'm not knocking your trade at all. I just want to make sure that you understand what you're getting into when you take this trade. You're getting into a trade without momentum or a clear path. You are trading from the area, not into the area. You had room to get to the next area. Easy to go break even when you get there and take advantage of it. So you're trading with direction. You're trading with all of your trigger lines up. You're trading from the fib that the small triggers broke, and you took a chance, and you did a beautiful job with it. And the fact that you weren't willing to lose on this trade. Guys, I'm not going to tell you that it's the wrong trade. I'm just going to say that when you know what you're up against, it becomes easier to manage. When you understand the challenges that may be present, you know when it's time to get a little aggressive on your management. You know when it's time to not hope for a home run. And then Cisco, it's just a small chart. It's a lot of momentum. Oh no, you took a jump in short without momentum and you held on to it for 72 days. You wandered the desert for 40 days. What'd your large chart look like? Oh, that was the one. Large chart looked good, but the correction was beyond. I remember this one now. Thank you for sharing that. You're awesome to do that because I said nobody would, and Cisco's like, I take losers. I'm not scared of you. Love it. All right, who was this? This was GWC. Yeah, termination. And you get to the right side of trouble. I love this because, man, GWC, where people were going short, you took the long because you knew that we were past the correction point. You knew that it was a termination, and you even had divergence from outside of the outer band. And you said, man, that's at least going to make the mid band. I love that trade, GWC. If you don't know what you're looking for, it looks aggressive, but man, that's a good one. Termination, odds favorable, but no clear path resistance. I waited, no triggers through. I love it. Jen, great job. Great rule adherence. Usually when people show their butt, it's because they're breaking rules. Yours was recognizing that your rules weren't met and you chose to stay out. That's hard to do. Great job. Gino, 50-50 with divergence. Man. 50-50. So it has the potential to break with all that momentum. You didn't give it a chance for divergence to print. You just jumped in at the lowest point. You took a shot at the momentum trade. And that's all this is, Gino, is this is a momentum trade. Does that make sense? You're trying to trade the breakout. By popping in at this fib, small triggers are through, momentum is great on both charts. You're just trying to trade the breakout. And the fact that you didn't leave a metric butt ton of risk on it is beautiful. I'd get on board with this trade all day long, Gino, and you took a tiny little loss. A tiny little loss on anticipating the breakout from a great top. And man, that's just a part of trading. But I think that was a very calculated risk with awesome looking momentum coming from a great termination condition. And you put yourself with more advantages than disadvantages. And you took the perfect momentum style entry because you did have momentum on both charts. It just didn't work. So Rockstar, man, solid work. I dig it. Muser, Are you really going to do this to me, Muser, today of all days? You're going to see a termination, and you're going to wait for the reversal, and you're going to insist on odds favorable, and you're going to take the perfect entry, and you're going to get paid all the way down. Muser. Great job. Can you guys hear me? Because I'm loving on you guys uncontrollable. I need someone to blush or something. Muser, great trade. Termination, full reversal, odds favorable. It's a 50-50 trade. One divergence doesn't scare you because of the great top. Your entry is freaking rock star. And what a great, easy way to make money. And man, I know that you've been struggling with a couple little things here and there. And this is perfect. And you said that you should have stayed in longer. This is the ES. That's 200. That's almost a $300 trade, isn't it? Hold it. No, 4 points, 50. That's 200. That's like a, holy crap. That's a beautiful trade. 537, Muser. Why stay in longer? Go play golf. You're done. Do that every day. That's $126,000 a year. Was that your first trade? You waited all morning and then you hit your goal in one trade, and now you're just sitting in class on simulator in case I say something smart? Nice job, Muser. What's your daily goal? Just curious. You don't have to tell me. But if your daily goal is 500, it's 300. Okay, so here's the question. Are you on sim? Are you saying I can make more? Sometimes if I hit my goal, I'll trade until I lose. And guys, I've had days where I've hit my $500 goal, $250 per contract, and traded all the way up to like $1,500 before I took a loser. But you got to be willing to stop after the loser. Muser, great work. These are the moments that I get super excited about, guys. When you guys come in and you're going through that repetition and you're really committing to getting the basics down and learning, and then you show me the victories, right? Great job. All right, David. All right, David, I'm going to type in the chat box real quick. Fibs, mid bands, yellow one-to-ones. I don't know if you caught the lesson on the one-to-ones earlier. Those magenta one-to-ones, couldn't care less about them. I love, love, love the mid band. I love the yellow one-to-ones. These little tiny swings, they're everywhere. Who cares? But here's the thing, man. 4 or 5 ticks outside of the window. And you said that it was too tight, and I agree with you 100%. And you totally robbed yourself of money on this one. This is the best look ever, and you don't trust it enough to be willing to fall on your sword with all the advantages. And guys, that comes through repetition. That comes through doing the same thing, seeing the same thing over and over and over. So David, your job on this picture is to re-annotate it. And say that my stop goes 4 or 5 ticks below the window of opportunity. I have to give the market a little bit of room because all the 5-1 is up and down ticks. All it is fluctuations. And it creates challenges. And then Zen Trader, not reversal trigger lines. They're just down. You had a couple divergences. The triggers roll. It's a 50-50. You sold before you hit trouble. All right, Zen, are you with me in here? Awesome. Just for grins, I have Fibonacci support. I have Fibonacci support, 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 all the triggers above. These areas aren't broken. Sometimes when you take a momentum style trade, sometimes when there is stacked trouble in your way, it's okay. It's all right to get paid at the first trouble and then maybe go break even, right? Because from 99 to 89 on a 10 lot is $1,000. Oh, this is MCL. Well, it's $100. And here's the thing is you've got to change your mindset because it's easy to look at that and go, well, it's only $84. That's $840 when you go to a big chart, when you go to a bigger account. And one of the things that we're so good at is understanding trouble and being able to get paid at it. I like your trade. I love the momentum. You let it clear. The momentum is outstanding. It has the potential to break. You cleared the troubles. Just be willing to get paid a little bit every now and then. Great job, Zen. Very zen. And then Haji. Cisco, mine are the same ones from the website. If you go to resources, we'll do two things. But if first you delete your workspaces, your templates, and then just run the indicators, it'll give you everything that I use. I don't have anything special, guys. I don't have anything that Nexgen doesn't give you guys. I don't create different templates or change trigger whatevers. I'm not smart enough to do it. But if you don't want to do a full rerun, hold on just 1 second. I'll gladly share mine. Let me go to my templates real quick. There is my 5-1. I already had that one zipped. Just save that to NinjaTrader 8 templates chart. And let me get you my 13.2 as well real quick. Hold on just 1 second. I got you. You want to start fresh? Okay. Well, you got it anyway. So to start fresh, and I'm assuming you probably already know how to do this, but if for some reason that you don't, here's all the instructions on what to delete and all that good stuff so that you can get going 100% brand new. And if you need help, Jason can help too. But Zen, great job on that one. Good job on embracing momentum. And just going to look for those areas, right? We're in it to get paid. All right, Haji. Odds favorable, clear path. Right at the bottom of the window, and off it goes. That sure is pretty though, isn't it, Haji? I mean, that's everything that we look for. Right at the bottom of the window. I mean, beautiful. What a great looking trade, guys. And then Andy, same thing. Odds favorable. Everything's down. No divergence. Perfect entry. Out at trouble. Divergence prints on the 50-50 and you exit. Absolutely perfect. Andy, flawless. Did you do that live, Andy? And Haji, you'll catch that one next time. There's no doubt in my mind. Great job. Yeah, that was the best look, Haji. So put that one in your spreadsheet. When you're talking about what it's going to take to get you into the market, I should be able to steal your spreadsheet and find that picture in there. And when you put it in there, like it should be annotated like 32 flavors of kick-ass because, man, everything about that is great. Don't you dare miss that one. And then Andy, perfect. Great execution, perfect entry, solid management on a medium probability trade. You guys are making me proud today. Don't make me cry in front of my wife. All right, TLC. Little tender lovin'. Odds favorable. Bad bottom. No bottom, odds favorable. Pull back to the mid band. Clear entry. First trade entry closed because your TP were not showing on chart. Close at 100, entry on second pullback, fluctuation, then you got stopped out. So TLC, let's talk about a couple different things. And I love that you exited because your profit targets weren't in place. It is odds favorable, but it is a bad bottom. And guys, when I've got a bad bottom, my mid band's my first bounce point. My mid band is where I'm saying to myself, this thing may continue down, especially if it's been railing down all morning. And it's just a bounce point. You take the pullback to the mid band, but notice how it's on the wrong side of this correction point. And sure enough, it goes all the way down right to the 1-to-1s at the synthetics. Guys, that's that split trigger. And this is where if you take it up here, you got to be ready for it to go down here. Your second entry just above it, I love it, quick profits. And then when that divergence prints and everything's rolling and you're at that mid band, great exit. I think that this one's a little aggressive because your correction point is split. And guys, are you good with that idea? Let's open up a large chart real quick and take a look at it. When I have a pivot from nowhere, my mid band is my first bounce point. When I have a pivot not from an area, that resistance, that mid band becomes my first potential spot. And you see it a lot. So if you create that expectation that this isn't a good bottom and it may continue in the direction of the trend, right? Not a good top, and it comes down to the mid band, that mid band may bounce. Even if the large triggers aren't a full bar away, it's an awesome opportunity for you guys to create these expectations. From a bad bottom with weak triggers, the mid band's the first trouble spot. Once you clear it, we look for the good stuff, right? We just have odds favorable and a clear path, and it pulled right back to the mid band inside of favorable large triggers. I hope you guys are in that trade. If you're following rules, you should be. We'll see if we get a couple of those posted in the room. But TLC, I hope that makes sense. Just that little expectation, knowing that the mid band is a potential bounce point, those split triggers create a little bit of difficulty. It'll just keep you in a little management hat, but you managed it beautifully. Good top, odds favorable, clear path. There's those damn split triggers again. Right? Took entry a little early. And those split triggers absolutely smoked you. All right, Haji. That is the thorn in your side, my friend. I wish I had a nickel for every split trigger loss that you've showed me. Because, man, I'd have a lot of nickels. Yeah, I know. I wish I could say the same thing about the mistakes that I've made. But I'll tell you what, there's a point, Haji, where you'll never trade this again. There's going to be something that clicks in you and you're going to be like, oh, man, I've seen this. You just haven't seen it enough to believe it yet. So TLC, these large triggers are a moving average. These synthetic triggers are a moving average. So my expectation and why the favorable large triggers is so effective is I expect price to return to the triggers. If they are stacked, the correction point is small, tight, concise. If they are split, I have two correction points and indecision. Does that make sense? So when I talk about those favorable large triggers, guys, when I talk about them every day and we talk about entries and we go back and we say favorable large triggers, this is where the advantage is. So TLC, what I'm talking about is when those large and synthetics are one on top of each other, man, you throw a couple areas inside of there and it's just warm, fuzzy feelings. This is the best of the best. This is the one where it's so easy to find your entry, and there's a lot less indecision or wondering or hoping or wishing or anything like that. And then the second those triggers start to split, and yep, I've got pictures in here, it creates this funky little look, right? And you're like, which one's it going to correct to? And you just don't know. And one is so much better than the other. And guys, there will be times when you start to say to yourself, I'm willing to take it here, I'm willing to take it there, stuff like that. The problem is does it work more often than it doesn't? And Haji, I'm so glad that you posted that. If you go back and you look at 10 trades where you had this look, how often does it go to the synthetic? And now you start to create an expectation. And when it gets to the synthetic, does it stop cold? Or would there be a better advantage by waiting for that confirmation at the synthetics? And then you get to start running with that large chart. But I think that if you went back and you looked at your pictures, what you would find is that this look, the low entry loses more than it wins. And I know that it's a pain in the butt, guys, and I know that it feels like work, and I know that it's not something that any of you want to do, and every one of you want to be rich without effort, and that's not realistic. But if you go through, and I want you to see this, I'm going to click on high probability entries from the 101 section. Area inside of tight favorable large triggers. There's my favorable large triggers. Area inside of tight favorable large triggers. Area inside of tight favorable large triggers. Area inside of favorable tight one on top of the other large triggers. Again, 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 and again. So what happens is that if you take the time to do that 101 chart reading exercise, if you take the time to see that look 50 times, is there anybody in this room that doesn't believe that maybe that becomes your look, that maybe that becomes the best look, that becomes the highest probability look? But if you don't take the time to do the work, guys, if you don't take the time to do the work, you're not going to create the trust. And if you don't create the trust, man, you're going to keep taking those damn split triggers trades. And you're going to keep getting upset about the losses. So just a little something. Again, I'm going to give you guys everything that you need. I'm going to give you guys everything you could possibly hope for to be successful. But you're going to have to work a little bit to commit it to memory. Jen, termination, no triggers through, and your rules saved your bacon. I love it. I love that you're posting pictures of rules not met in here. And then Dave, practicing restraint. Trade you didn't take that you would have before due to large chart reading. That wasn't your long? Beautiful. Gap theory. David, great job. Great restraint. And the money that you didn't lose here is money that you're going to make someplace else. So David, thank you for posting that. I really do get excited watching you guys take these lessons and get better. So celebrate those successes, guys. When your rules aren't met and you avoid a loser, celebrate it. Say, hell yeah, look at me go. Odds favorable, clear path. Where did you get in? So you got in down here on a 50-50, but it was a clear path, and it pulls right back to the large triggers. And Jen, that's that same picture from 2004, isn't it? Pull back to the small triggers. It lines up with the large triggers. It creates an opportunity with all that momentum to go up. Nicely done. And then when the third higher divergence prints, it just kind of confirms that you're in the right move. Makes you feel good about staying in that trade a little bit longer. Beautiful work, Jen. And then Haji, if this is split triggers, I'm coming after you. Odds favorable, clear path. Area inside, perfect stop. Probably should have rule not to take trades at edges of wide synthetics without reversal or confirmation. Haji. Boo. Did you have momentum, Haji? Nice job, Jen. Did you have a clear path? Did you have an area inside of favorable large triggers? for all intents and purposes, brother, they are pretty much stacked one on top of the other at the time of your pullback. You had one line inside of triggers, right? And they were a one on top of the other at the time of that pullback. So, and look at where your stop is. Perfect. Haji, if you had to create a percentage and say, how often can I expect this look to win? What do you think? Anybody? How often, with momentum, a clear path, and coming from an area inside of those triggers, how often do you suppose this trade wins? Decent's not a number. Could we say that this is a trade that typically wins 70 to 80% of the time? Can we say that this is a trade that when I follow the rules, when I have the advantages, provides a statistical advantage? That this is a trade that I should never miss when it sets up, because if I take 100 of them, I'm probably going to win 70 to 80 of them? So Haji, what you got to do is you got to say, man, I kicked ass. It got me. Who cares? But then when you been getting my butt kicked lately, what happens is you start blaming the perfect trades for kicking your butt and not these crappy little split triggers that you know better trades, right? Wouldn't you agree? This is an avoidable loss. Dude, that's the one that I'm never going to miss. So when your confidence is a little down, Haji, even more adherence to the plan. When your confidence is a little shook, go back, right? When you're feeling like you're not really where you want to be, circle some tails, right? And be willing to say that it's not always perfect. And sometimes it's unbelievable, and sometimes it's not. But if I go back and I circle these tails and I look for these opportunities, what I'm going to find is that there's enough of them to justify my patience. There's enough of them to say that it's okay to not take it with 3 divergences. It's okay to not take it from not in an area. It's okay. Because what's going to happen is I'm going to patiently wait for the best of the best. And when I do, more often than not, I'm going to win. More often than not, I'm going to find success. More often than not, things are going to be okay. 50-50, odds favorable. Question is on the small. We have yellow 1-to-1s. Do I ever consider this to be a termination condition? Great question, Jen. The only time that I consider this a reason for alarm is if divergence prints from it. Otherwise, I'm hoping it gives me a bounce. It shouldn't, Andy. When you say you cleaned it out, you got rid of tick, you got rid of cache, you deleted all your workspaces, like full enema. One thing I'll do if I'm really struggling is Andy, I'll go through database cache workspace, not the full, just the daily. So when I'm having just fits, and man, I have them too, is I'll go through and I'll do a couple different things. I'll go to database and I'll get rid of everything and I'll force it to start fresh. And this is the only time that I'll delete everything from inside. And then I'll go to temp and I'll get rid of everything. And I'll go to workspaces and I'll get rid of everything. And I'll go to templates and I'll go to chart and I'll get rid of everything. And then once I do that, once I go full enema, full clean out, Andy, I will go to the resources page and I'll download the indicators. And I'll let NinjaTrader 8 run the repair as well, just in case there's something going on. And I'll literally go through just a full-blown clean out, like start to finish, 100%, because the 10 or 12 minutes that it takes me to do that is easier than the frustration being created by having these problems. And I'm telling you, they happen some days and there's no rhyme or reason. And my brother spent $500,000 rewriting the software to make sure that it wasn't us. And some of the best programmers in the world can't find anything wrong with the software because it's the same DLL that runs on NinjaTrader 7. It's the exact same code, but there's something in NinjaTrader 8 that's on NinjaTrader's side that needs to be rectified. But the cool thing is he's spending another $500,000 to create a browser for you guys, and hopefully we'll have it in the next month or two. And you'll be able to sit on the beach with an iPad and trade the markets. And that's pretty freaking exciting. And Jen, I think we saw yours. We saw that one. Haji, we saw yours. Acceptable losses. And then Jen, we answered that one. Nathan, I love it when you post, Nathan. You're so quiet. Nathan says that we're a tick off support, so that's cool with him. Odds favorable, 50-50, no divergence, perfect pullback, money, 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 money. Afraid of divergence? That's all right. Divergence is scary. But with this look, you know what? With this look and divergence, Nathan, it's cool to exit, right? No, you can still trade NT. You still can. I won't. I'm going to go browser version, 100%. I'll be able to open it up the same way I'm opening up a window to look at a picture. And it'll look exactly like what I'm used to. And with the funding company, with the browser version, life is good. And then, Nathan, this is awesome, dude. It's a 50-50, one divergence, two divergence, definitely not. You got in, you got paid, man. That's important. So great job on that one. And then Jen. Question mark. The 13.2 and 5.1 have same fib levels, but the range chart is different. In terms of fibs, is that my computer or not? Well, couple different things. Jen, how many days back are your range charts? So if you right click on your range chart and you go data series, is it 10 days back? The same way that the 13.2 and the 5.1 are. 10 on all. Okay. Do you have tick data? You have to have it a range chart. You should, right? Okay. Hold on. Let me pull it back up and take a look. I mean, it's okay that the fibs aren't the same. Your synthetics, I'm coming in on the synthetics. 90, so there's your 90 fib from the 5.1 right there. There is your 84.90 from the 5.1. And then you've got your native fib at 89. You have your native fib at 79.46. You look like you're in line. But here's the deal. Notice how at 79.46, there's not a fib on the 13. So there's not going to be a synthetic here. At 84.90, there's a fib on the 5.1, and there it is right there. So you're actually totally in line, which is cool. But you're also seeing the native fibs. And look, there's your 13 and 5.1 fibs down there. So no, you're perfect. But remember, because there's different swings on the range chart, the native fibs will be different as well. But you've got everything in order. Yeah. So native, let's talk about it. I say native. Indigenous, how's that? Get that off of there. Do you really? Yeah, I guess you would from Australia, huh? All right, so all the fibs that go all the way to the right are the Maori. I don't know how you say that. I always mispronounce it. Maori? These are indigenous if they go all the way to the right. These are the 13.2, Aboriginal. There you go, that works. The thick lines that don't go all the way to the right, oh, that's New Zealand? Thanks. So I'm in Texas. I'm my own country here. The very thick lines that don't extend, this is from the higher time frame, synthetically built, like a 21. And then these are going to be from the 5-1 chart. And this is a 13-2 chart, but anything that extends all the way to the right is native, aboriginal, indigenous to that chart. It's formed from the swings on the 13-2. And then the ones that don't go all the way, let's go back to it. Those are synthetic. Synthetic meaning from a different time frame. On the large chart, they all matter. On the large chart, they're all important. And the rest of it is just kind of recognition on the smaller, faster. Good stuff. Guys, we have like 10 minutes. I've got a bad bottom directly into a mid-band and resistance. So that's a termination, even with the momentum, without a good bottom. Oh, man. I've got split triggers. I don't have any rules met, guys. I can't trade into a termination. There aren't any areas inside of triggers. Whew. Keep them coming. We got a few minutes. So let's talk. Great question. Nathan had good recognition on his earlier. So we're going to go through a little how does it become. So the fibs. When you open up NinjaTrader and that workspace starts coming up, your pro trader is measuring every swing in the market on those charts. I mean every swing, every up, every down, every pivot. And then it's creating synthetic time frames. It's creating higher time frames, lower time frames. It's projecting forward. It's looking back historically. And what it's doing is it's creating all of these alternates. It's creating all of these retracements. And there are literally thousands of calculations. And then my brother's smart stuff comes in and it starts to run these algorithms. And it runs and it asks which lines are the most important. Which prices have the highest concentration. So all of these measurements, Jen, create these red lines, these blue lines. So if I am maybe a tick or even two above it still, or maybe I don't quite get to it, then I'm okay with that, right? These are areas. That is complete overrun. But sometimes you'll get a little push. This went a tick or two above, right? And the same thing as if it were a tick or two or below. These are areas. These divergence lines are exact measurements. The yellow 1-to-1s are exact measurements. They are 100% based off of that little bit of math that goes in to create them. So fibs are areas, 1-to-1s, divergence lows. These are exact numbers. Does that help? You're what, 2 ticks off of it there? Maybe? It's hard to tell. That's a lot of space and I'm old. Yeah, 2 ticks, that's an area. So right here, I'm saying, yeah, that was close enough. But the reality is I probably wouldn't hesitate with that big of a gap, 3-4 ticks. If everything was perfect, I might take that last long into it, right? So it's going to be one of those things where when you are close, I don't know. That's a bad bottom. That's a pretty big gap. That's a whole point. That's weak triggers with divergence. I'm not going long into anything here. Awesome. There are no advantages, Muser. There are no disadvantages to the gap theory. There's no advantage. Well, actually, you know what? That's not true. There is one advantage. When you understand that if price accelerates away from the large triggers fast and far and hits an area, if the large triggers are a full bar away, that's the gap theory. And all it says, Muser, is that price is likely to close back to that gap. That's all it is. It doesn't mean go short, but it keeps you from getting suckered into that long before the gap gets filled. That's all it is. And it's a pattern that repeats itself all the time. It's a pattern right there, right into the mid band, right into resistance. There was a full bar back to those triggers. It kept you from getting romanced into this long, thinking that with all this momentum, you should have a trade. If the termination condition didn't make you believe it, the gap theory was just, you can hear the sucking noise as it goes back to those synthetics. And at this point, there's no trade. Does that make sense? That's really all it is. But you'll be able to recognize it. Let's see if we can find it. Price reaches all these areas. Large triggers don't follow. Price sucks back to it. Price reaches support. Large triggers don't follow. Sucks back to it. That's all it is a pattern. There it is again. And it just says, you know what? Don't go short, brother. You might get your butt kicked. 3 divergences on 5-1, each one lower than the last. Let me see where we're looking here. Termination, full reversal, odds favorable. I don't think these line up. Hold on. $83. I can't see your price bars here, but this big fib should be evident over here, Paul. Momentum on the 13-2. 3 divergences. Your synthetics are still green here, which means that this trade probably happened up here. Nope, they're red. They rolled. I'm trying to line it up. I'm not sure why this fib isn't on your large chart. But termination, strong triggers, 1 divergence, right back to the perfect entry. You didn't take it due to the divergence on the 21-3. So you're saying that where was it here? 83, 86. It's right into the divergence low. It is right into the fib. But it's a termination. It's a termination. It's odds favorable on every chart. So maybe bar fight, Paul. And you know what? If you didn't take it because divergence printed from a fib, good for you. That's a problem. And what you'll do is you'll start recognizing that from the termination with that level of momentum, with the smalls absolutely smashed through, with odds favorable on every chart, with that tiny little window of opportunity, you may say to yourself, I'm willing to lose $100 on this look because I have way more advantages than disadvantages. Does that make sense? And I believe this is the same trade that Jen took. So it's a little bit of truth in that. Eventually, you'll get to the point to where you are so in tune with advantages that it helps out. Gap theory said don't go long up here, right?